Everyone. Firstly, I would just like to acknowledge the passing of Durham Havel and the Havel family, a past mayor of the Westland Council. So yeah, a great man. All right, I'll call for apologies. Declarations of interest? No. Public forum, petitions, deputations? None. Item 5, confirmation of the minutes. The recommendation that the committee resolves and confirms the minutes 15th of April 25, they're true and correct record. Can I have a mover for those? Yep, Peter Haddock and Brett Cummins. Any matters arising from those minutes? Actions list. There's one action on the action list which has been completed. To prepare a paper for the committee to provide the options to the catastrophe fund, and that's here.
Complete. Yes, Mr. Chair. Well, just one issue I've got here. We go relating to the minutes.
Oh, yes.
Item page 4. The third bullet point from the bottom. I didn't realise when we discussed this that it was so involved with improvements to the car park. And I'm conscious that there's a lot of new staff in the council, but back 4 years ago, under a different chairperson, Mrs. Maven, regarding the car park, we did have a carried motion passed regarding the loop around the building for car parks out in the grass here.
Out on the side here.
So we come up, public have got these, and staff will have these ones. And we had a walk around. I see there's a car park out there today, so they must be there for anticipation of the car park. So 4 years now, I would have thought that would have been actioned by now. It's on the minutes. It's carried.
That is an action point.
Definitely.
Okay.
Because these things are forgotten when we get new staff and new councillors for that. I'd just like it moved on a bit because no urgency with it at the time, but 4 years on, I think it should be progress.
Yep, we'll make an action of that. Thanks, Councillor Ewan. Action list. So can I have a mover for the action list? Brett. Peter. Chair's report. Verbal update. Basically, my chair's report is to thank Peter Miller and his team for some very comprehensive and accurate reporting. It's really good to see reports that are accurate and believable and something to work with going forward and know exactly where we can as a council. So it's good. Well done, Peter and the team. Section 8, reports. I move for that. Andy? Yep, Brett. Okay, 8, reports. 8.1, local government official information meeting. Act, Lagoma, 1987 summary of information request.
So unfortunately, Claire Brown can't be here today. She's sick. So I'll look after this one. So basically this lists out the Lagoima, 27 Lagoima requests have been processed. And basically all of the Lagoima process had been processed within the statutory timeframes. So there's not too much else to talk about it unless anyone's got some questions.
I have a question. So this will be Tony Morrison's last one, is it?
That I'll have to divert to Joe for.
No, I don't expect so. We are slowly transitioning it over to the governance team. In fact, we've got people on training over the next few weeks to get and how to process them. But I would expect that we will slowly transition it. Maybe that the reporting changes, but we'll definitely still be using Tony over the next few months and likely for quite some time for really complex deployments.
One of the requests, TPP staff commissioner qualifications. refuse to protect privacy. Is that, you're allowed to do that?
Yes, we don't tend to share information about a private individual.
The qualifications though?
Yeah.
Okay. Do those people, have to prove conflicts of interest then?
They would have to declare conflicts of interest if they were, as they were processing, I would think so, yes.
So the staff and the commission, are they considered employees or contractors?
They are contractors.
Do they still have to do conflicts of interest?
If-
I'm only asking all this because when we go to the TTP meeting, there's going to be some questions asked. That's why I'm asking it now.
They're unlikely to have conflicts of interest when they're making those sorts of, the decisions that they're making through the TTPP and the recommendations. I think it would be unlikely that they would, but if we had one, we would have to do it as with anything else.
Because they're always asking for more information from contractors and consultants and all the rest of it, but do we actually know? We never get to see any of that. And in the TTP meetings, we don't get to see whatever the consultants say. They say they go off and employ a consultant to look at more information. But as on the TTP committee, we don't get to see any of that information. It all goes to the commissioners and then disappears. It's like it. We don't even know if it actually happens. The only reason I ask is because we had in the news last week those people for $2 million embezzled out of government contracts. You know what, there's not a lot of transparency here of that sort.
So I'm sure that if you would like to see some of the work that's been commissioned, that we could get that and provide that to you.
Right.
I can also assure you that any money that's being paid out is actually being reviewed by the project manager for TTPP and is also then either signed off by the chief executive. So we are setting the invoices that come through, and the project manager is monitoring that. So I think if there's any concerns, you could bring it up with through the TTPP committee.
Are they tax invoices?
The work that we purchase, yes.
Well,
Through the chair, while I've been on the TPP committee, I have seen the conflicts that they've been, of any of the commissioners have actually declared any of those conflicts. And with regards to any of those people that we're acting as consultants on specific information, all that information was provided to members of the TPP committee. I've read that, so I think you'll be able to find that correct. So it's been there when they did one, and that was approved by the committee to engage consultant on specific part to assist the commissioners in their
did you see the information?
decision making.
Did you see the information?
I read all the information that comes through here,
Oh,
but you know, we're still waiting on the commissioners' reports to come through. Of course, we haven't got those yet. We've only had one so far.
okay.
Mr. Chair.
Yep.
Just one issue for me, and I don't want to be too pedantic over it, but go to page 11. Just an example, 27th of January. There's a compliance monitoring request for information, and it was refused. Information does not exist. I really think the word refused is the wrong word, because to find that the information does not exist, there's been some action. So it's been declined because it does not exist. Refuse is a bit blunt, as though no one's done anything. No, it's refused. We're not going to do it. You know what I mean? I think we could just use a better terminology.
Yep. Okay.
Finally, it's declined.
Noted.
Through the chair, I think there is standard terminology used in response to the wording requests, but I can certainly check on.
I'll have a mover for that report. No more questions? Chris? Peter. Okay, 8.2, quarter 3 financial report recommendation. committee resolved, receive the report. And I'll get you, Peter.
Yeah, thanks, Chair. To the councillors, obviously this is a step forward from where we've been in the past. We've gone, obviously providing quarterly reports since I've been here. The first one was sort of December, this is the next one, March. And this one we've put in a forecast as well. So I've asked each of the GMs to basically forecast their cost out to the end of the year to June. And just gives us a little bit of confidence around where we're going. And some of that's around obviously the timing of how the budget was phased and just basically where we've ended up in regard to the full year report. So you'll find in this report, there's obviously the forecast. In this report, you'll also find we're actually doing it by activity as well. So resource code is what we call what we do at the moment, which is wages and salaries, finance costs, other expenses. And then we get to the second report, which is by activity. And so that's my first version of trying to give you something which makes a bit more sense in my head anyway. So if it doesn't make sense in your head, I'm happy to take comments and basically so we can improve the reporting as we deliver to council on a regular basis. So in that second report, I've phrased it between what's general rate funded and what's targeted rate funded. And I've left overheads in one line. And the reason for leaving overheads in one line, as I talk about in the notes, is just around the fact that there were, when the budget was set, there were things basically put in the wrong budget. We've basically put them into the right one as far as we've incurred the actual expenditure, and it just saves that whole in and out piece that we'd have to talk about otherwise. So that's sort of a bit of a high level what I've done. And as we turn through the pages, we'll talk about the reports when we get there. So basically, in summary, the council is in surplus at the end of 31 March 2025 of 214k. The budget had a surplus of 3.5 or 3.6, and we are unfavourable to that. Now, basically, quite a bit of that is basically timing around when we're going to receive the infrastructure grants and subsidies. And as you can imagine, infrastructure grants and subsidies are driven by where we're at with the various projects that we've got underway and whether we're able to claim those milestone expenses back. Largely from the government as part of that process. And what I've done is I've moved that out of where we had it before in grants and subsidies and moved it to the bottom line. And I think that just gives you a better representation around what the operational revenue is of the business of the council, and pushing the other one down while we drop. While it is something that we can obviously affect, it's something that's almost binary related. So I wanted to move that out of there in order to get some separation. So when we talk about the timing of the revenue, it's around recognition of when things are basically either due to be billed or in the case of Te Kinga, where we release funds from an advance revenue and advance account. There's a lot of cases we've paid in advance with some of the grants that we get from government. Expenditure wise, we're tracking obviously above budget as well. And it's when you get to that activity report that it demonstrates that most of our most of our overspend has been in TTPP. And that's really just on the basis of the budget was probably a lot less than what we have incurred so far. And I don't think we quite understood what the costs were going to be because it was a bit of a first. And so there is a large cost in the TTPP well above budget than what we would have expected when we did the annual plan towards the beginning of this year. So then we can talk to the forecast. So we've got a forecast that anticipates we'll be at surplus by 2.5, 2.6 million. And that's lower than budget, but a lot of that is basically just the infrastructure work. So we've moved away from the timing differences that basically disappeared when we get to that forecast level. We're starting to recognise things for things that we need to do for June. And so it gives a better picture, I believe, on where the council is actually ending up. So I thought from there we could just go through page by page. I want to give you guys plenty of opportunity to, councillors, plenty of opportunity to provide me some feedback where you think I might need some bit of clarity. So we move to,
I've just got one question on page 18.
Okay.
It says right at the top of the page, it says, which is offset by total of income received from LINZ for LiDAR imagery. Do LINZ pay us for LiDAR imagery?
I believe it's actually the councils that pass.
It's a subsidy from LINZ. The project subsidised from LINZ, meaning 88% overall.
Yeah, okay, so I thought they did all the LiDAR imagery. No,
No,
do we organise it?
we do. And so that's done in conjunction with the other councils on the coast, similar to the aerial imagery project.
Oh,
Yeah, so and when you read the forecast, here, we're not expecting to get all of that money that we originally put in the budget back either. So that's just another offset piece that we've got.
no, I just thought the LiDAR was a government thing. No, obviously not.
So if we go through page by page, so 16 is the report. Page 17, any questions on that? No?
And
Yep.
just one other question with the quarries, on the page 19, it says unfavourable budget due to quarries, 480,000. Somewhere else in here, it says about the quarries are actually advanced, is that because of the rock on hand?
Yeah, so that 418,000 was obviously costs incurred to get rock.
Yep.
And basically in this report for March, we've recognised that rock on the ground and recognised that it cost.
Yep.
And
Yep.
so that's basically that part of it. And so when we get to year end, of course, we'll recognise anything else that they've done in between this time.
Right.
But again, it's a cost. So we wouldn't expect the quarry this year to be making
Money
Too much.
until next year.
too much margin. Basically because it hasn't sold a lot of the rock.
Yes, yeah, that's correct. So the way that Tracy done the accounting is she's recognising the asset at the cost that it takes to blast the rock. So the actual cost of creating it as opposed to the sales price. So this, it might actually reduce our income next year as well, because we've recognised a portion this year. So we've recognised up to say $21. Whereas if we sell that rock on the ground next year, we'll only be able to recognise the difference.
Yeah, so it's just basically margin. I mean, in theory, that's a standard business stuff.
Yeah.
You know, you recognise costs when you're doing your inventory. And then basically you have that margin in next year when you actually sell it. Otherwise, you'll be recognising something that you may not necessarily get. Under page 19, where you're at. You might probably get some questions on the next one because it's my version of the trip, my different view when we slice productivity. Sorry, Kate?
Just one question, just something that Blair mentioned there. I understand the LiDAR, the aerial imaging that we do with other councils, is that on a cost share basis?
It is, yeah, so it's shared in a similar way across the councils and with a subsidy from LINZ as well.
Thank you.
Through the chair, I just note under 7 and that's on A and B, we refer to Te Tai Oputini, but that should be the plan. That's the TTT plans. We're actually referring to
Yep.
both those, on both those there. So it says for Te Tai Oputini, so there's no confusion, it is a TPP plan.
I'll make sure we talk about that next time.
Yeah, I think it's clear because it looks as if it could be work done by Gantini Ngātahu or something, you know, rather than it is actually the actual plan cost.
Yes, it is.
Thank you for that.
And
Through
these were offset by contractor underspends in the grading districts of 355,000. So
Which whereabouts are you, Andy? Sorry?
I know you said.
that's on 7A down the bottom.
Oh, yeah.
Yes, that's timing of when things are done. So obviously within our rating districts, there hasn't been a lot of contractor costs gone through for that in the current year. And so we're just favourable at the moment. I mean, we've still got, I'll say from March, we still had a quarter to go. And there could very well be some costs that get caught up in this process where Catchment have been doing some work and those costs just haven't necessarily been billed yet. And so that's more of the timing.
As well, so the way the maintenance budget is set is based on, we sort of carry it over each year, we go, oh, they paid 100K this year, so we pay 100K next year to avoid those peaks and troughs in the rate take. So we would expect to see an underspend there because we're not rating for actual work, it's for unforeseen maintenance. So if we have an impairment on a bank, if they don't spend that, it just builds the prudent reserve. So it's
Is
quite
that
common for us to have an underspend there.
Overall in ratings. Yeah, that's across all
So through the chair, to be clear on that, the rating schemes that they're making, the staff recommend a budgetary figure for the maintenance, and that's actually built in. But then if that's not spent during that year, that's where that underspends.
Yes.
Yeah, it's just cash movement, isn't it?
Yep, it's guesstimate.
It's just, and it just depends on where we get to for the rest of this particular year, because that comment was basically based on March. So that's where the spending is going to be in the next quarter. Wow. So we move on to the winning one. The new version, A version. So this in theory takes a different slice of where we've been before. We just talked about resource code, just that level down to where we can basically talk about the various activities that you do within council. And you can see I've just split it between general rates and targeted rates. Now, when you think about the rating districts, the targeted rate for the rating districts will include loan repayments as well as obviously the operational costs for the rating districts for the 12 months. So that emergency management is just basically cost recovery from that point of view. And the one district plan and the targeted rate is probably, well, it is about 328,000, and we've spent forecast for the year is going to be around about 2.9. So quite different when you think about what we're actually rating for and what we're actually hearing from that plan point of view. And that's all about the intergenerational loan that we're basically establishing for the TTPP. And then infrastructure is just basically the same as what was on the other report. Just pulled through. Go to page 22. Here I just talk about the fact that we were at some things and things are around when you talk about quarry, just a better result than what we had in the budget. So it just depends on what was in the budget when we did that as far as the outcome for the forecast. And VCS and environmental sciences around spend for the rest of the year. And the nice thing from my point of view is overhead is forecasting positive by the end of the year. So when you think about that, you think about the fact that we had basically a budget that was split by 12. And so over the 12 months, it was just basically chopped up in that way. But when you think about the timing of when we had contractors and consultants in, they were very much front loaded from the point of view of the costs because we didn't have staff and a lot of that going on. And so a bit of that's why we unfavourable at the moment and then favourable when we get to year end. And then if we just move on to page 11, just balance sheet. Still be any questions around that. Nothing really to note other than we will have some higher borrowings at the moment because we've obviously drawn down an additional loan in February, and we'll talk about that when we go a little bit further into the document. But there's a work in progress split about where we're at the moment around our work in progress accounts and the work that's going on at the moment within the various infrastructure works that we've got going on at the moment. I think we get some feedback, doesn't have to be today. We get some feedback on just how I'm trying to report these things and whether that makes sense to you or whether you want to talk about some other things when we have the next meeting. Because obviously the next time we'll meet, we'll be talking about June 25 actuals. And so that'll be obviously the end of the fiscal year, and we'll be talking more about the annual report. But keen to get some feedback at some stage when we've got time and marinated over a little bit and to understand exactly whether that makes sense to you what I've done or not. That makes sense to you for my view.
With their debt, the rating district debt is repaid, the rating districts repay their loans.
Yes, that's correct.
That's correct.
It just flows through the
Yeah.
revenue
Yeah.
for the targeted rate.
Okay.
Yes, that's correct.
But our actual council debt, what happens with that? Is that being repaid or are we just paying interest? And how much is the actual council debt?
Okay, we've talked about council debt at some of the other workshops, okay? And I think we talked about it when we talked about the annual plan last time. So that was where we talked about where the council debt is currently at.
Yeah.
The council debt going into the 25-26 year was sitting around 10 million.
How many?
10 million.
20.
10 million. And obviously, let's talk about it in more general terms. So you've got 17.5 or 17.6 million when we ended last year. Of that, there was basically 7.6 that was allocated to, and there was about 10 million that was sitting as council debt. And so that was probably the first time we've actually talked about council debt. And this is technically from the infrastructure work.
Yep.
And so that's where we need to start to think about, well, okay, what do we do about that debt? How do we pay it back? Because that's where we want to get to, is in a position where that debt is paid back.
Yep.
And we're only holding debt in theory that relates to infrastructure works that we've got going on, and obviously the repayment of that debt through the rating district loans. Yep. And so that was always penned to basically be done in the next LTP. Just what we want to do and how long that we want to repay that debt over was basically part of the next LTP cycle that we're going to talk about. And that's how we described it last time.
Thank you.
Through the chair, look, I'd just like to thank, just reiterate what Chair Mark said. This is great having all this information. You know, when I come into council here, we were flying blind, you know, we didn't have any information. Well, I think that's what alluded to the rates debacle we had in year one. But now we've got clear information. Councillors can see going forward what the state of the financial situation is here, and I really like the way you've set it out so we can see how it's all tracking, and it puts council in good stead for the new council coming in, you know, and this quarterly reporting is great. So just thank you very much to Peter, you know, for what you've brought and the staff to bring this information. It's invaluable and it allows council to see where they're tracking and what have you. I do know that you know, the media or people probably say, oh, the council debt's increasing, but we are borrowing on behalf of the rating district. So you can't have the infrastructure projects happening. We're borrowing on behalf of those rating districts, whether they be for the joint committee ones like Greymouth or Hokitika, for those schemes to give protection, and they're paid off on a long-term basis. They've secured, but the ratepayer paid back. But also noting in there too, you know, we've got a really good fund in there, which is going to come up later on. You know, it's around $14 million, which has been great for this council over the years to actually hold that fund, which started off at $7 million. You know, so it's actually doubled up. So I know other councils around haven't got that fund, and I wish they probably wish they had. You know? So, but anyway, it's a great asset to have. So thank you very much, from my point of view, for that really clear information going forward. And I'm sure councillors can sort of look at that and ask lots of questions about, you know, where we're going. But the information's there, which we never had in the past.
Just a quick question on the fund. How much of that fund is actual council funds? How much is money held in bonds?
So when you talk, so you got a couple of questions in there, I think.
So was that, Peter?
I think you got a couple of questions in there.
Yeah.
When you talk about,
You're talking about $14 million investment fund.
yes,
Okay. How much is that as actual council money? And how much of that is bond money held on behalf of mine?
So the $14 million that we've got sitting in the investment growth fund.
Yeah.
I mean, that is all council funds.
It's all council money.
Correct. When you think about the mining bonds, we've got about 4.5 million of mining bonds in the system. And of that, probably 3.5 the council has spent from a point of view of running the business or running the council. So those mining bonds are basically partly utilised by council in the past to fund its operations moving forward. So there's around $1 million odd sitting in accounts which are held particularly for the mining bonds, and that's a process that has changed probably in the last 12 months, where in the past those mining bonds have been utilised as cash for
Working capital.
Working
So
capital,
you've used 3.5 million of the miners' bond money for working capital.
Yes,
Is that what you're
correct.
telling me?
That's what I'm telling you. Yep.
You know, I appreciate and reiterate what Chair Haddock said. It's a big improvement. And, you know, this was all worked through the workshops we all attended. And it's no surprise where we're at. It's good. It's the result we wanted. The issue relating to bonds has been a historic one from past councils, and that's rectified. That was worked through the workshops too, and all that were there, knew that, and that's the outcome we've got. So that's progress. Well done, Peter, and the team.
I mean, the thanks goes to the team, really. Everyone to do the hard work. I'm Jerry, just a good job of coming and talking to you about.
For Chair, how much of that 10 million is actually from the TTP process?
I think it's about 3 off the top of my head, Andy. I'm pretty sure that's the number that I remember from, might have been somewhere between 3 and 4 for last year. And that's, I'm thinking more about what the start of this year was rather than where we're currently at now, because when you think about where we're currently at now, we're spending somewhere around $3 million this year. And of that, only 300,000 or 400,000 has actually been funded through a targeted rate. So that's only going to get bigger, that number. But I think we're almost at a stage, correct me if I'm wrong, that when we get to September, October, we're largely through the TTPP process, the One District Plan process. And so there will be some costs obviously ongoing after that point. But we should be largely be the big spend as far as getting the plan operational.
And then once it's operational, will there be much cost? Or?
I believe there is a cost going forward. I don't know whether, Peter, you've got any knowledge of that through your TTPP plan discussions, but there will always be an operating cost of keeping that.
Depends how many hearings there are.
Yeah,
Is it hearings?
it's a bit of a, again, a little bit of unknown.
You know, a hearing could cost you $100,000 for each one, easy. You know, we're probably going through one in Christchurch for the quarry going next door. So it's going to be about $100,000. That's what I was saying. So that's just a pretty simple one.
Yeah, so Mr. Chairman, I wonder if I could just come in and comment here. So you've had the update on where the TTPP, the One District Plan costs are sitting, and that's only going to grow to get it towards, you know, the operational decision from the Joint Committee. When councillors are commentating on, you know, hearing costs, the more accurate term is appeals to the Environment Court, and increased costs associated with mediation, let alone court fixtures. And Councillor Cummings is quite correct. You can actually measure that in multiples of 100,000 a time, just about. So you're quite correct there. So the TTPP One District Plan is going to exceed our budget quite considerably, and that's being shown here in the papers that Peter Miller has brought to you. Just more generally, what I would say is that our finances are complex, and that's why this paper is not as simple as just in a standard business looking at one single profit and loss account. We actually manage multitude of profit and losses in that more traditional business sense, and with the rates and all those sorts of things, and income and subsidies and that sort of thing. I would encourage any media that are listening to this today that in terms of your coverage of this paper, to avoid any misreporting, I would invite you to contact Peter Miller, and he's available to you to talk you through anything that you would like to report to make sure that you get accurate reporting, because it is complex and it's difficult and it's hard to interpret the nature of local government accounts, especially in this regional council where we have 23 rating schemes. Plus we have our business unit inquiries and VCS and those sorts of things. So I'd really encourage any media to ring through to Peter and talk through and get an understanding for any articles you're going to cover on this paper. Thanks, Mr. Chair.
Thank you, Daryl.
I'll just like to thank Peter for the report. It's about the first one I can actually read and understand.
That's great.
I'm just curious about the investment fund. Do you reckon that's kept up to inflation?
That's probably going to be talked to. We've got a lot further in the meeting.
So we're gonna have Tom Phillips online around.
So he's going to talk to that.
So that's probably a very good question. For
Yeah.
Tom, because he's been part of that process for quite some time.
Yeah.
Through the chair, I'm happy to receive the report.
Hang on.
Oh, sorry.
Just in relation to that issue, and it's one there that's in the background, and that's the cost of the plan, the one plan. Whilst we've been minimalistic and passing that on with only the 300,000, it's an issue that we are going to have to address in the coming months to redraw some of that cost down, because we've got to target it to where the ratepayers are well aware that this was imposed on us by government.
Yep.
We can't forever go on and let the crime tick on. We've got to actually address it. See that done sooner than later. Because it's going to get away on us if we don't do it and face up to it.
Would that get in as an action point?
It's something that we're going to talk about certainly in the annual plan. We have sort of brought it up as part of that discussion when we talked about whether we should add interest onto the loan as part of that.
Well, I made my feelings in an email
Yes.
about that. So we will be having another workshop on it.
We'll be having another discussion about annual plan, and I think it's probably a good thing to tackle at that point.
Fine. Thank you.
Okay.
So I'm happy to move to a recommendation, receive the report, and also add to register of thanks on behalf of councillors to the finance team for the updated financial reporting.
Thank you. I'm second it. It's councillor Egan. So do we need?
Michael go to this next door.
Anyway.
Yeah.
So we're just waiting for Miles O'Connor to come in. He's going to talk to this next. So 8.3, Treasury, quarterly Treasury update. West Coast Regional Council, quarterly Treasury dashboard, 31st March 25, Langford.
Mr. Chairman, you going to put that motion? Passed. Moved by Peter, seconded by me.
It was done.
All in favour?
Yep.
Oh.
All right. And Miles O'Connor's going to talk to this next report.
It all depends on what Trumpy does with his new airfield.
They'll have all the answers if they don't keep dropping off your aircraft carriers. Morning, Miles. How are you?
Miles,
Good.
Miles. Yep, morning, morning, get them online. Oh, where shall I go? Yes, there. Yep. No people online, but. You again? You too. Thank you. So what we might do is, to the chair, just go to Miles's presentation, what he's got.
Yes, that'd be great. Can we bring them up?
Well, hopefully. This one. That's like.
There we go.
So Marcus is a quarterly dashboard. Right. Thank you, Mr. Chairman, for the opportunity to present today. Look. Good, sorry, jump in. I won't go through the commentary because it was done on the, as at 30 April, but even then things have changed a wee bit. Well, do you want me to mention anything? Although I have got some slides later on, which probably provide a bit of an update. So shall I take that as read the commentary or?
Yep.
The next slide just gives the, the parameters of the of West Coast Regional Council's funding. So that's the maturity profile that you've got there. It just shows the fixed rate bonds that you've got in blue, the commercial paper, which is in the sort of the brown, the FREs, which are in red, and the letter. So what that shows is that you've got a good spread of funding maturities. Total debt 24.15 million, and liquidity ratio is 183%. You have to have a minimum of 110%, so you're well above that. And the reason for that is that mainly, well, there's three factors that go into it. It's any cash in the bank, which you've got one term deposit plus the value of the managed fund, which includes the liquidity purposes. So 183%, you're way above it. And the cost of funds is 4%. Now that has been coming down over the last year or so, and it's with the fall in floating rates that you've got that we've been having. The OCR was 550 August last year, and now we're July last year, and then it got dropped in August to 525. That was the first cut, and now we're at 350. I'll show you in the later presentation just where we think that it might be going. The next slide, it shows some of the metrics. Again, I don't need to go through those, but the two most important ones, graphs here, well, bottom right, but your policy compliant. So these are with the fixed rate hedging percentages. Now that graph on the top left, is everyone familiar with this? Do I explain it, or
Probably wouldn't hurt seeing we're public.
All right. So what the graph does is this is the interest rate risk management parameters, and those are the ones on the bottom right. And what we do is we have a minimum level of fixed rate debt and a maximum level of fixed rate debt that you've got to comply with. That's in the Treasury policy. Now, just to be clear, this is where there's a little bit of confusion sometimes creeps in, is that this is not the funding maturity profile. The funding maturity profile is when your tranches of debt mature, and that was on the previous slide. This is how much fixed rate debt that we've got and floating rate debt that we've got going out to 7 years. So, no laser point here.
Use that.
Yeah, that would. I'll probably put it in the wrong place. So where Peter's got the mouse at the moment, the grey area, if you just go up to the top of the grey area, that's your debt up there. That's the total debt level, which is 24.15 million. Now, those red lines show the minimum. Actually, I'll probably just go with the screen. That one. Yeah. So these are the minimum and maximum levels, and these correspond to these ones, these percentages here. So
2 years goes out to here. Maximum level of 100% of your debt can be fixed. Minimum level 40%. So that represents that. That one now dips down into the 2 to 4 years, where the minimum level of fixed rate debt is 25 and the maximum level is 80. And then in the 4 to 7 years, minimum 0, maximum 60%. The green is how we've fixed the debt using interest rate swaps, and the blue is how we've fixed it using fixed rate bonds.
So either of those instruments can be used to fix your debt. And it's just there's a time and a place for each one.
It was better to have fixed rate bonds. Lately, we've been having floating rate, interest rate swaps. So the total level of fixed rate is here. So those have to be always between that and that, that and that, that and that. So you're totally policy compliant. And we did do some interest rate swaps just before the end of March. I thought
We've done them a wee bit early because interest rates went down, and now they've gone up again quite a bit. And I'll show that later on.
and this one is quite an important graph. And there is an update on it, although I don't know if it's too much different. That's your projected cost of funds. So you're at 4.24. So it shows it actually staying pretty stable out to March 26, and then only going up a wee bit. Now, most councils actually,
their cost of funds goes up more than yours does. And the reason why is that you've got some quite high levels, quite high fixed rate bonds, which were taken out earlier. Now, that was just a fact that you had more fixed rate. You had debt at a certain time when interest rates were high, and it was just, there's nothing you can do about it. I mean, it's just a fact that, if you have to buy a property and rates are, property prices are high, you'd have to buy it. So it was just a function of the market.
but you can see that the floating rate, this is the projected floating rate, but in other words, the 90-day rate, that does go down. You get a wee bit of it. You've got the fixed rates, but then this move up, you're pretty much immune to it out to there. So a lot of councils are actually now going like this, whereas yours is very steady. So that's the good. Yes. Are there any questions on that?
So financially, Miles, that's a good outcome for this council as we stand presently with headroom and all those things that we want to see good.
I'm pretty happy with that, actually. Yes. The good news is that see where the top of in that sort of naught to going out 3 years or so, you've still got, we've fixed a reasonable amount of debt and we fixed them at good rates. They're in the mid threes, but you've still got quite a bit of floating rate debt because at the moment you've got 15 out of 24 million fixed. So you've got 9 million floating and the floating rate is going to go down. So that's going to help bring that cost of funds down a little bit. So we have deliberately left some, we want to strike a balance between getting more debt fixed because we had to comply with the policy. That was our first objective, or our first objective / necessity. But we wanted to leave a reasonable amount of floating rate debt to enable you to take advantage of the further falls in the floating rate, which I'll show later on in the next presentation. So
yeah, that's what you outlined in that workshop we had.
Yeah. So that has worked out. When I presented the workshop, I didn't think that we'd be having quite the same sort of level of volatility that we've got at the moment, but I'll talk to that later. The next slide. Thanks, Peter. Those are the LGFA borrowing rates, and then there are your actual funding rates. I think that's pretty self-explanatory, isn't it? The should just one on that. No, the funding rates. The only bad bit of news there really is that the fixed rate bond that was it's at 239 matures this month, so that was at a very good rate. We can't replicate that. That was taken out quite some time ago. So that's the report. Are there any questions on that? Very clear. Let's go to the other one. Well, yes, please. Yeah.
So we need to move that report first, don't we?
We'll come back and talk about that. Okay, so this is just Miles taking us through his quarterly report.
Yeah.
And, basically, other presentation, and then we'll go through this.
Yes. Yep, cool.
Oh, there you go. So this report that Miles, sent to me yesterday, you've got it in your council tab in your inbox.
Yeah.
As a soft copy.
Yeah.
We just haven't printed it out.
Yep, understand.
We had to leave this as late as possible because things change by the day.
Yeah, for sure.
Well, the
Phone call.
oh, yes, this morning.
Yes.
This is a public meeting, isn't it?
Yes.
Yep.
I'm going to the States next week and next month, and so I've got to be careful about what I say in public.
Yeah.
I might be pulled up and then stopped at the border.
Yep.
So this is the only page with sort of the writing on it, but I think it was actually, this is a very good piece of, very good summary. It was written by my co-worker, so it wasn't me. But I just thought it sums things up very well. And I really like that quote at the top. There are decades when nothing happens and there are weeks when decades happen. And that was Lenin, Vladimir Lenin, the Russian leader, who actually said that. He was the one who coined the phrase also useful idiots. I don't know if that's applicable today or not. So what's Trump done in his first 100 days? And I am just going to read this, but he's instigated significant changes in a likely new world order in both trade and security, arguably the most meaningful changes since the end of World War II. So globalization really took off after the end of World War II. And what has been happening now is just unwinding those, the political alliances, the defence alliances, and the trade alliances. So what's he done in tariffs? He wants to generate revenue for the US government. Tariffs to, one, generate revenue for the US government because he has to pay for its tax reductions. Trade protectionism, and it's a tool to reshape global trade relationships, all of which are actually happening. Security, a move away from multilateralism and institutional diplomacy to economic nationalism, strategic deterrence, and transactional alliances. So really, it's the role of the US in the international order. It now only wants to do things that are in the US's interests, whereas before it was more global and what would benefit the world. Whereas now it's very much America centric. He's challenged the US Federal Reserve and its independence. He's actually called on the US government, on the Federal Reserve and the chairman, Jerome Powell, to ease interest rates. Now that's just not done normally by political leaders. I mean, you don't see our Reserve Bank being told by the Prime Minister or the Minister of Finance that you must drop, because inherent in monetary policy in a central bank is its independence, because it needs to be operated independently of any political influences. The degree of volatility and uncertainty is such that many central banks and major companies are now providing. Bank of Canada and the European Central Bank are now not forecasting what they will do. They're not providing commentary on what they'll do with future interest rates. This is a huge change, which is normally they do. Ours still is. And companies actually, US companies, I mean, I saw one of the first ones was Walmart said we're not providing any forward, because it's called, continuous disclosure and with public companies and also profit forecasts. They're not providing that now because they just don't know what's going to happen. Very high levels of volatility in equity and bond markets. In one afternoon session, the US bond market saw the most significant moves in 38 years. So that was since the 87 share market crash. And there is a graph later on, but in one day, I think it went from the US 10-year Treasury bond yield, which is the global benchmark for interest rates, went 3.88 to 4.5, which is a massive move. Then went down to 4.18, I think, and now it's back at 4.45. We just haven't seen this, for decades. Now, what it's actually leading too is that investors are questioning the extent to which US remains the premier destination for world capital, because it's seen as, obviously the premier, the premier global economy. I think it's 60% of the world's capital goes into the US, but what we actually saw in the height of that sell-off in both bonds and US equities was that there was a flight out of the US, which is the traditional safe haven in times of uncertainty, and they're actually selling the country that they would, which would be the recipient for those, those equity flows and those flows into the bond market. And European share markets, Japanese share markets, Asian share markets, and the bond markets were all the recipient of that. And I think it's pretty obvious, but no one knows how this is going to play out, both in terms of intended and unintended outcomes. We just don't know. I mean, it's good that the 145% tariff on China has been reduced to 30%, and the US has now a 10% tariff on its goods imported into China. But the extent of the changes is just mind blowing, and some of the the pronouncements from the White House. Are we going to get? I'd have to say actually in the last 2 weeks, been better. And if anything, and I think the US share market's actually was back to the level it was. Yeah. And in New Zealand, I mean, the consequences that the OCR may go lower. I would have said 2 weeks ago it was going to go lower, and now it may go lower. I'll show you this in a chart later on. But banks are now forecasting a 250 to 3% range, or it goes up in the second half of 26, which I showed in that graph earlier on, but you're actually quite immune to that because of some of the good cover that we've got. So that's the boring bit of it. So now the graphs, which are quite solid, not the boring bit of it, but the wordy part of it, and now the graphs, which are the visual bits tell the story. So you can see that back in the 1920s, trade protectionism, tariffs went up, and then they have come down ever since, and that was from sort of the 30s, recovering from the Depression afterwards, at the very left of the graph, and they've come down over the last 100 years. And then you can see how much they've gone up in, well, it's now 6 weeks. So there's 110 odd year graph, and you can see that we haven't never seen anything like that before. Tariffs.
That's unprecedented.
Yeah. The next one, the China-US trade war for now, what I just jumped the gun a wee bit earlier on, but this is, you can see that sharp move up that we have, but now we've had a resolution in the meantime. These supposed halt to the tariffs, the putting off of them or the lessening of them is 90 days, and then we'll see what happens after that. My view is that he won't go back to what he was doing, because I just think he probably didn't expect the extent of the reaction that he got. And, with the US being not seen as the preeminent sort of destination for global capital, I think it gave him a bit of a shock. Also, they look at the bond rate, and those bond rates going up also. They're actually back up to where they were in that big sell-off at the beginning of April. So I don't know what your thoughts are, but I just think he's probably, he may have seen that he has to moderate some of that behaviour. The next one. Now, can you actually read that from where you are? There's one on this, this is actually a really good graph, I think. And this just shows what's going to happen. Can everyone read that?
Yep.
Yeah. So these are just what, responses to questions, actions firms are taking in response to the higher tariffs. And the blue line is the services. So, like we provide professional services, insurance services, and then the manufacturing, the IBMs, the Boeings, the Caterpillars, General Electric, General Motors. So you can see 76 and 47, but 76% of manufacturing, 42%. So that's inflationary. And with inflation comes high interest rates. So that's the direct consequence of that. Absorbing cost increases internally the next one. So lower margins, so lower profits. so lower economic growth. Now, we heard of one of our clients is a large wine exporter, and they were told that don't put your prices up, because if you do, to the US, don't put your price up, because if you do, we won't buy anything from you, so you've got to absorb the increase. So we have heard that some firms are saying, because the US has a slightly different distribution system where they have an importer, a distributor, and a retailer, and you've got the exporter, the distributor, and then the retailer, and what they actually came to was an agreement that they would each absorb a third of the costs, which was a more equitable sort of way. Finding new domestic suppliers is finding new
Just
foreign
really through, what sort of percentage are you talking about?
for.
Like you're saying they're absorbing the cost between the three of them?
So that's so New Zealand's
10%.
10%. Yeah.
So they're doing 3.3.
Yeah. Yeah. Now, the one that I find really interesting here is relocating production of services to the US, which is very, very low. So the third one from the bottom. Now, the whole idea of tariffs was to relocate manufacturing and production to the US. And look how many are doing it, hardly any. You know, I mean, in the manufacturing sector, what about 11%?
It's caused more flight convenience. Not less.
Well,
Because they relaxed the rules with China because of tech, wasn't it?
yeah,
They were trying to get tech back into the US.
Yeah.
Tech, they decided that with China, they couldn't match in price.
no.
So it's not happening. That's why that's been relaxed, isn't it?
And I mean, you had going the other way. I mean, China had, what was China's tariffs? 110%. And
Yep.
you had, you know, a number of Boeing jets which were being finished off in China, and they had to fly them back to the US because they weren't accepting the orders, the Chinese airlines, because suddenly it's costing 110% more. So that's been reduced to 10%. But the whole thing about that particular one, and I find when I only saw this on, we just found this graph on Monday, and I just looked at it and I thought, well,
Not working, is it?
if to shift a manufacturing base back from China or Mexico or Vietnam, wherever it is in the East, back to the US, there's a huge investment and it takes a huge amount of time. Now, are these policies going to be unwound in, well, a year and a half's time, maybe in the midterm elections, or if there's going to be a new president? So do you want to take these huge, I mean, relocating a factory and building a factory is, a multi-decade achievement. It's a multi-decade.
Especially if they've got a resource management.
So,
And they got to start them too when they say,
Yeah. And that just shows that the intended consequence of the tariffs may not be working.
Bottom line, it's not a quick fix.
No. And business confidence survey just showing, this is going back to 2003. You can see the first big dip was the global financial crisis. The second big dip was COVID. That third dip below the line was that mini US banking crisis they had a couple of years ago. And now we've had this very sharp decline, which actually beats, I think, the global financial crisis and COVID almost in terms of the speed of the decline. But I think it has improved. So over the last, we had this graph about 3 weeks ago. We haven't had an update on the graphs. So
we'll be looking at a bit more flat lining from there, I think.
Yeah. Yep. So the US, the bond yields, this just shows the New Zealand 10-year bond yields in black, the US 10-year bond yield in red, and the German 10-year bond yield in blue. Now, the US 10-year bond yield is the global benchmark for long-term interest rates. And the interesting part of it is that you can see there's quite a big correlation. And that move up there, that move up there was when the market started factoring in a Trump win, because that seems inflationary because of the tariffs. And then they came down again. Then they focused again because they focused on the inflation. On the economic slowdown effect of it, so they pushed bond yields down. Then they went to the inflationary trade, so they went up. Now this was the tariff day. It was that big move up there. And you can see New Zealand went up, but not to the same extent. But the interesting bit that I was saying earlier is that when you had this big up move here, you had the German bond yields come down. And that doesn't happen normally. Normally they will move, and you can see they move in tandem. But as the US went up sharply, German bond yields came down, and that was because of that flight of capital and the reallocation of capital away from the US.
Is that normal?
No. No, very unusual. As I said, the US is that sort of global benchmark, and they normally follow them pretty closely. The German bond yields did go up a bit before that, because that was they announced huge increase in spending, including defence spending.
Right.
One thing I would say about, I mean, some of Trump's policies, a couple of them, I do agree with, and I think the defence spending, with NATO is correct. I mean, the US spends 3.6 or 3.8% of GDP on defence, and those European countries are supposed to spend 2% under the NATO Charter. They were spending 1.2, 1.3%. So I actually think it's right that the other, because they were protecting Europe. Okay, it wasn't the US's interests, but I think the other countries had to step up, and I agree with that. And I think some of the sort of the unfettered immigration that we saw over the last 4 years had to be curtailed. So I do agree with those two policies. I'm not totally opposed to what he does, but some of the other ones I'm slightly dubious about. Now, Mr. Chairman, just asking about the exposure to the US. So this just breaks it down into the sector. So, well, other is the biggest, but so I'm not sure what other is. Everything that's not there that you can think of, but meat is the biggest, and then dairy, and then beverages. So a lot of that's wine. And then
Forestry, so what is it? Other?
yeah. So forestry and logs mainly go to China, mainly go to Asia and China.
Yeah, they do,
And Japan. So there must be a whole sort of range of other goods. We have a client who exports to Caterpillar and Mercury Marine, from Christchurch.
Yep.
And so that would go into the mechanical machinery part of it. Starches, I suppose I was wondering a little bit about that. Actually thinking what exactly are starches. So we wouldn't be exporting potatoes, I don't think. So would it be grains?
That I think comes out of. No, it wouldn't be going to the US. It wouldn't be.
Grain, I believe.
No.
Yeah, we all through the Midwest there. You go through the
Yeah.
cornfields in Iowa and that, and
Yeah.
so I'm not sure what start. Oh, wood and after, sorry, 371
Yeah.
million.
With that seafood somewhere,
Yeah.
might be a small part of other.
Oh, that would be another. Yeah.
It must be smaller than iron and steel, otherwise it'd be on the chart.
Yeah. But they do have to have a certain amount of New Zealand meat in McDonald's burgers apparently.
Really?
Yeah, yeah. I was just at my brother-in-law's farm last weekend, and he said most of his beef goes to the US. So, and they do have to have a certain percentage to make up the quality.
Lean mince is too fat,
Yeah.
so they've got to get out cow kilos and long meat to mix it.
Supermarket in Christchurch has got Australian beef.
Yeah.
Can't buy New Zealand beef.
No, you can't. South Island, that is.
Yeah.
So that could be about 70 cents a kilogram in our beef schedule, couldn't it?
Yeah.
If we got to pay a 10% tariff, fine beef's about $7.50 and manufacturing beef's about $5.50 for.
Good, mate. I'm pleased you're starting to give Don a bit of credit. You're going on with the usual rhetoric anti-Donald Trump. One of the things you said originally was that the US only does stuff for its own interests. Well, you need to think about the US Navy. US Navy guarantees free trade all around the world, even China. Now, that's a huge cost on the US taxpayer. A lot of, it even guarantees freedom of access for China to its markets. So you've got to think about that. You just see what's happened to the Houthis. No disrupting world trade. That's been sorted out. There's nobody else going to do that. So you do need to start recognising the value of the US. And I see you're saying could impact New Zealand's exports. You don't really know. Lift your game.
I totally agree with and I probably should have said it, I totally agree with the defence side of it. And that the USCA does guarantee defence. And, they do guarantee, they help provide world trade and protect world trade. But I mean, it is having an effect on you. I mean, we know from some of our clients that it's having an effect on export. We've had clients just who have had export orders cancelled. So it is affecting exports. So yes, I agree with that part of it, but I don't agree with the fact that we don't know that it's not going to have an effect on our exports.
He's got a huge problem. 32 trillion debt. He's got to sort that out. And he did have to sort out the trade imbalance with China. There's going to be a bit of a shakedown, but at the end of the day, he has to sort that out.
Yes, there is a big trade imbalance, but I mean, that part of the reason for that is that the US just can't match the China's manufacturing costs.
Yeah. So Miles, has been through the chair, Miles, has been a warning shot fired across the bows by the US, and there's been a lot of economical, unrest, but it seems to be settling down now. So my question to you is, the best thing we can get out of that is the lowering of the interest rates, really, and that's what's so the projections are that our interest rates are going to go down to 3 or maybe 2.5, which is good for us. I mean, it's crystal ball reading, really, but we've got to realise there is volatility in the world. But just, I guess, from your point of view, what you manage for us, that's on the. I haven't got too many more slides. I have got some slides. So, as far as the easing cycle goes, this just shows the extent of the hiking and the easing cycles that we've had since the OCR came in 1999, and the easing cycle, the hiking cycles are up the top. So it just shows the 325 points of easings we had leading into the global financial crisis, a huge increase we had of 525 points in the aftermath of COVID. But on the easing cycles, we've had five previous easing cycles for this one. And one was for 575 points, that's the GFC. One was for 75 points when they started easing and then realised they got it wrong. And the middle three, one was 150 and two were for 175. And this one, we've already had 200. So, and I'll show you I'll come to this in a minute, but we're probably going to have at least another 2 interest rate eases, another 2 25-point easings, and then possibly another one. So if we just go to the next slide. And these are the monetary policy expectations. Now, these change by the day. And it shows that New Zealand's in black. So it shows the solid black line shows the actual easings that we've had. Yeah.
And the dotted line shows the projected future easings. So the table on the top right shows that the markets are expecting the OCR to drop by 25 points next week because it's showing 324. Then by July, I won't go into the maths behind it, but it shows a 72% chance that it will be at 3% by July, 100% chance that it will be at 2. By July that'll be at 3. So it shows that there'll be 72% chance that it'll be at 3 by July, and then the low is showing in November this year that there is a 60% chance it'll go down to 275. Now,
So from now to November this year, you're looking at dropping about 50 basis points. So we're looking.
definitely 50. So yes, 100% chance it'll be 50 points. And
So you'll be into the mid threes interest rate was
so 3% for the OCR.
3%.
Yeah. And a 60% chance that it will be at 275. Now, a couple of weeks ago, it was 100% chance it'll be at 275, and there was about a 90% chance it will be at 250. But with the sort of unwinding of what's been happening, and the sort of the dialing down of the trade wars, that the markets have actually pushed those projections up, because this was based on a pretty big economic slowdown.
They can pretty much say by November this year, 100% it's going to be.
I won't bother with the next slide. I'll just go through to the next one. And that's just a bigger graphical illustration of that earlier one that we had. Just showing, I've just rolled it through to May. The good thing is that you don't actually have to do any fixed rate cover, because do go back to the previous slide. It's actually important that the black line is the 90-day rate, the red line is the OCR, the light blue line is the 3-year swap rate. Think of that as the 3-year wholesale rate, and the black line and the dark blue line is the 5-year wholesale or swap rate. Now you can see that as the OCR has come down and the 90-day rate has come down, some of these swap rates have gone up. And the reason for that is that the OCR is totally dictated by the Reserve Bank. And the OCR can only be what the Reserve Bank says. The 90-day rate follows it very closely. But the bond rates are more influenced by US bond rates. And they have so medium and longer term rates have started to go up, while shorter term rates have gone down. And what this means is that those longer term rates are now above the 90-day rate, the OCR and the 90-day rate, and that's normal. When we had the longer term rates lower, and you probably saw it in mortgages or investment rates, you saw the longer term rates quite a bit lower than the short term rates. That's called an inverted yield curve.
Yep.
And that we've only ever had it twice in the last 25 years.
Mm.
The first time was in the global financial crisis, and then now. So what we're seeing with interest rates now is that they're returning to normal. So the next graph is that's the previous one. So we don't have to do any long-term cover at the moment, because we got policy compliant, and answered your question earlier. We did that at the end of March when some of those longer term rates were lower. We don't actually have to take any more cover from a policy perspective till April next year. April and May next year. Now we may well take the opportunity to do it, but we don't have to as a necessity. Now I guess my question to you is, and it was decided at the last meeting, or one of the last meetings, we're not going to hedge future debt. We could do under the terms of the policy, but that grey line just shows where the debt is at the moment. What's your debt likely to do?
$1 million question. It's in theory, with the infrastructure works that we've got on the go, it's going to go up in the next 12 to 18 months. And then it just depends on what other infrastructure works come on from then.
Yeah.
And that's the bit that is probably difficult to gauge. It's a bit gazing, really, isn't it? It is.
Yeah, but with that eventuality, what you said, Miles, at that previous workshop we had, the council was in a good position for that incoming influx of finance, which is government funded. And the bottom line for us now, we're still in the same position, if not a better one at the moment with the interest rates, because we've got ours up higher.
Yeah.
So we're looking better than what we did in the last workshop.
Yes. Yeah. Your projected cost of funds has come lower.
Yeah.
I mean, if I said to you, look, where is it going to be in June next year and June the year after? What would the best guess be?
You tell me what the interest rate's going to be June next year.
And of course, those projections that you said, those projections that you give us, and they've turned out to be correct, that's irrespective of what past councils, past chairs, past chief executives done with the bonding thing with the miner, because that's a separate issue. We've addressed that now under the new council.
Mm.
So that issue is put to bed, so to speak. And I think the
Yeah.
projection is going to be pretty good.
See anything.
We definitely could tell you what it'll be, tell you the number off the top of my head, but
Yeah.
out June next year, because we've got that understanding already available to us, and could probably look out 6 months past that maybe. But again, it just depends on what other opportunities for infrastructure spend become available from the government, because those are usually the things, and Darryl might want to talk, those are the things that tend to drive the spend, and therefore the need to fund the local share.
I think that'd be a good time for Daryl to chip in and see what Daryl's views do. Daryl, you hear us?
Yes. Can you hear me?
Yep.
Yeah. Councillors, I wonder if you might agree with this sort of prediction of mine, really. So seeking some feedback, really. If you think about where the substantive part of our debt is coming from, which is the flood scheme upgrade and matching the government investment with the local share, once we get through the south side of France, we finish off the Hoki scheme, the last stage of the Grey scheme, and we finish Westport. I think we're through a substantial amount of our capital upgrades of our major schemes. While we've got the other flood schemes, and especially the biggest scheme that we've got by length of flood bank being the Wanganui scheme, with Councillor Campbell there, but look, there's no appetite there from that scheme to do a substantial upgrade. So I think a lot of the other smaller schemes will be a lot of maintenance, but I don't think we're going to be, there's an appetite there for a substantial capital upgrade. So I think from our infrastructure spend and capital upgrade on the flood schemes, we're going to be probably through in the next 12 to 24 months, probably 24 months, our substantial loan, and we'll know what that situation looks like. And I don't think we'll be taking on a lot more debt for increased capital upgrade across the other schemes. That then turns to our operational spend. We predicated our 10-year long-term plan on the fact that we were covering operating expenditure in previous council terms through debt. However, we're endeavouring to right that through the rates increases, and then trying to get back into cash surplus to pay down our operating debt by year 4 of the LTP. If we can still do that, although there are some challenges in that with the mining and other bonds being used as operating expenditure, so the operating debt is higher than we thought. But again, if we're inside this 10-year plan, arrest that, turn the corner, and start paying down that operating debt through cash surpluses for the first time in many years, I think that will arrest that. So what I'm saying, councillors, is particularly after another couple of years, I don't think we're going to be incurring the same debt profile that we have in the previous years. And that debt profile that we have incurred is we've done it knowingly, and it's an investment in our infrastructure, and is a good long-lived spend, and then we will taper off from there. So I don't envisage, particularly in the back half of our long-term plan, to be in the same debt calls as we've been doing in the last few years. And just seeking councillors' views on that scenario. Thanks.
Yeah, the investment that we've got with the major towns, 3 major towns and France, that's an investment in communities for their viability. We don't have population retaining, and they will move. Well, then we'll be in a hell of a lot of trouble. So it's an investment these communities are happy to go with. This council's done the work with the joint committees. And so I agree, we haven't got too many big rivers left. Wanganui is mentioned, that's a separate issue. But the community towns where the population lives, that's a good investment for those communities.
Sure. Any questions?
We need to fix their interest costs on their local share as long as we can while it's low, don't we?
It's not looking.
you know, like all these individual projects are gonna have their local share loans there, aren't they?
Yes, that's correct.
And while the interest rates are low, we need to fix their rates for as long as we can.
We get them through that government agency, though, the local government.
Yeah, it's through the government agency, isn't it? So-
The LGFA.
Yeah.
Yeah, but their interest rates are subject to wholesale interest rates, to what's happening on the interest rate markets directly related to.
Well, we lower you.
Speaking of what,
Well, can we get better deals elsewhere?
No, that's the cheapest funding that is the local government funding agency. Sure, as I said, shorter term rates have come down, but longer term rates have actually gone up. So, we
The
just,
opposite effect of what you're talking about, Andy.
So what Andy's saying is fixed in the next, 12 months or so while that prediction is, because you're predicting that the rates will go up, after.
the short term rates will go down
Yes.
and then they'll stabilise, then they'll go up. The longer term rates are totally subject to, well, very much subject to US bond rates. I think they're a wee bit, I think US bond rates are a wee bit overdone up here. And I think with the sort of the easing in some of the trade tensions and the tariff tensions, that's got the potential to come down a bit. Well, the other part of it though is you just don't know the inflationary effects on the US economy.
Mm. And like you say, that report come out last night, and it's changing daily, isn't it?
Yeah.
So, yeah.
Can I just ask one question? I'm just intrigued. It's not directly relevant to this, but I mean, we always like to get a bit of a feel with about 38 local authorities around New Zealand. How is the West Coast doing generally? Because I mean, what I hear is that, property prices are increasing, tourism is increasing. It's actually doing reasonably well at the moment from what I hear. Or is that just very localised for tourism and
Probably someone from Consents would talk to that,
Plenty of stuff going on.
wouldn't they? I don't know.
Yes, there are a lot of consents.
So that's a good indication. It's a pretty good indicator of where the economy's at.
So Miles, there is a air of optimism out there, but a lot of people are relying on what's going to happen in the future. So there's some big projects like Western Mineral Sands and Mananui, which is at its consenting stage at the moment, so it's, but that's really close to having a decision made on that. And I guess we'll know that in the next month or two. And that project, but same with Tigger Minerals, once they kick into gear, it's just waiting on them to get geared up in our Western and even the Reefton projects there, so there's a bit of a housing boom and a bit of a subdivisional boom, but it's, some retail that's reasonably sort of stable and quiet around the place. It's not, but if all these projects come to part, and the gold price stays up and some of these other mining projects happen, that there will be a boom here. There's no two ways about it. So we're fortunate there, but we're still waiting on to get through the hoops yet.
And Stockton's on the fast track, and that's probably going to give that an extra 25 to 30 year mine life for the Buller region.
so it's really, so a lot of the future economic growth could come out of mining, is it?
Oh, absolutely. Yeah,
I think you see the investment that rail are putting in. They've got the focus on that good, so.
100% has a downstream effect. Yeah.
And like farming income would be up 25%, I'd say.
The dairy price and the beef price?
Yeah.
Well, the dairy price is the best it's ever been. Is that correct?
Probably from what? $8 to $10 a kilogram.
So any more questions and Miles on that report?
Thank you, Miles, for your.
Thank you, Miles. Thank you very much. Now I have the report that Steve just read. I'm moving for that, please. Peter? And Brett.
I think isn't there a few bits and pieces there to go? Mark, on page 27.
April 3.
Oh, sorry. So do you want to, sorry?
We just need to finish off this.
I'll jump in the game.
Still got some more stuff.
So we're on, what are we on here?
So basically, we just need to go back to 8.3.
Yeah.
So have Miles go through.
Yeah.
Presentations and
Yeah.
now what we're doing is just basically following the recommendation. For receiving the report.
Okay. Receive the report and note the attachments. note the following activity in the LGFA. LGFA commercial paper debt of 3 million that matured on the 30th of October 24 was rolled further 92-day term maturing 30 January 25. Debt was further rolled onto 30 January 25. Another 89 days maturing on 30 April 2025. The debt was rolled a further 92 days and will mature 30 July 25. Do you want that moved as separate or do the whole lot?
No, do the whole lot at once. I might just read B if that's okay with you.
Yep.
Just because there's a couple of little adjustments to make. So LGFA commercial paper debt 6.5 was actually drawn down on 10th February
Okay.
2025. 6.5 million was split, 3 million maturing 30th of May 28 and 3.5 and 30th of May 29. So that's the end of that resolution. The reason why we roll the debt on a regular basis, and it's just the 3 million we're rolling, is basically it's the best price we can get at the moment.
Yeah,
So
yeah, yeah.
It's the main reason for doing that.
So that's already been drawn down.
I'm happy to move, Chair. Those,
So, Peter. Second group. That's that one covered off.
all in favour? All in favour?
All in favour?
Miles, the Conrail process is still dependent on the government decisions with the fast track. With the why the mining things and stuff, it's still dependent. And another big one is where the stewardship land gets placed. Who gets control of it?
Don't really what say.
Stewardship land gets placed, who gets control of it?
Yeah.
Still a lot of mining, gold stuff underneath it. And if we don't get a decision soon, it's just gonna. People give up hope.
Yeah.
We've had mining licenses for over 10 years on stewardship land, waiting for access, and eventually you just give up.
Yeah.
Through the chair, Francois, was that getting closer? Was there a decision, do you know anything about decision making on stewardship yet? Is that happening?
There's a decision coming soon.
Okay.
On that.
Miles?
Thank you.
Thanks, Lord.
Yes, right. Thank you.
Yeah, Miles.
Thank you.
Thanks, Mark.
Thank you. Yes.
Thank you. We're going to 8.5. Phillips is actually on one.
Oh, okay, yep, through that one next, so we'll go from 8.4.
Yep.
Tom on there?
Yes.
Right, cool. So we're going to 8.5, West Coast Regional Council Investment Portfolio Update. JB Weir, we've got Miles on the line there. Sorry, Tom. Tom, sorry, Tom.
That's right. Miles has left.
Yeah, I know.
Now we're just going to see what you tell us. Tom, we'll see if we get a
Something close.
Yeah, I guess I was kind of hoping Miles might stay in the room so he could, so I could see him squirm when I put him right. But anyway, I only got the last 2 minutes of his. Peter, shall I share my screen? I put some slides together. Although I'm sort of happy to talk to you all. I might just, I can just share the screen to show you the performance, but and then I thought we'd just have a bit of a chat about what's going on and sort of answer any questions you've got, rather than sort of plough through 15 slides. I'm happy to give you them, whatever you want, really, Chair.
Yeah, I think just go through the screen, go through the slides and just talk where you think's relevant. If we've got any questions, we'll have a question and answer time at the time.
Perfect. Okay. Let me just try to work this out.
Quite small print we've got here. I can read it, but it's
the Tom's probably going to talk to another level again. Above what we've got here.
Oh, okay.
Can you see that on the screen?
Not at this stage. It's got.
Okay, it's okay. What about now?
Coming.
Getting there.
Yep.
Okay.
Yep. We got that.
Yep.
Okay, so let me just see if I can plough. There we go. Okay. So what I mean, this is a table that you've all seen before, and you might say, well, why have I just put April up there? Look, the reason put April up there was just to show you, April was obviously a a tumultuous month for markets. And I just wanted to show that, despite the fact markets were all over the show, the portfolio was only down 0.85% for the month. And in fact, since the end of the quarter, so since 1 April, the portfolio is actually up almost 2% until put this together yesterday. So despite everything that's going on in the US and Trump's murmurings or utterances, that the portfolio is actually up almost 2% for the last 7 weeks.
Could you just put the presentation on full screen? Just because some of the numbers are quite difficult to read from here. If you put it on full screen, that's going to be as good as we can get it.
I think that
Go start slideshow.
Let's go.
Chelsea Mark and I that are blind.
You're sitting closer.
I'm trying. I think it's on full screen at my end.
Okay, that's good.
Sorry. I think I'll send these through to Peter, so hopefully he can distribute them all to you following the meeting anyway.
Yep.
And so then what this also shows, I hope you can see on the right-hand side, is this, so for the last 12 months, the portfolio's up around 5.5%. But since inception, so July 18, the portfolio's up about 49% versus the benchmark of just under 46%. So, we've, despite everything that's been thrown at us, particularly over the past seven weeks, the portfolio is actually proving, quite, resilient. And in fact, what's got us the return over the year has been quite evenly balanced between, the bonds and the equities. Although it's interesting when you look at the performance since July 18, so since inception, the bulk of the gains have actually, come from the equity portfolio. So I know at times, we've had some hesitancy or concern about the amount of equities we've got, but if we didn't have equities or shares in the portfolio, then we have to accept a much lower return, particularly in environments like this where the RBNZ's cutting the cash rate to a low number. I think it's important that we have a discipline around the asset allocation, which is on this page here, which of course the SIPO provides at 50-50. We're currently actually sitting slightly overweight growth assets or shares, so we've got at about 52.5%. And really that's because our view on equities is becoming more constructive, and potentially our view on bonds is becoming less constructive, and cash in particularly as the RBNZ's cut already from 5.25 down to 3.5, and we think heading to sort of 2.75, the return we're getting for cash is considerably lower. So within our equity component, we've put on a slight overweight to New Zealand equities in particular, and really that's because we think New Zealand equities have had a tough period over the last 5 years, frankly, and I think with lower interest rates, that should prima facie be good for equities, New Zealand equities going forward. So that's why we've turned slightly more positive on the New Zealand side of the ledger. I'm not sure if that corresponded with what Miles said or what you've seen down there, but we're pretty happy to start selectively adding a bit more to this market. Happy if I keep going?
Yep.
Actually, I'll just point out before I go through this that the catastrophe fund, if you recall, about 9 months ago, we put a term deposit on for half the money. So that fund's at a size of 1.03 million now, and 500,000 was on deposit at a rate of 6.2%, which was very attractive for 9 months. That's going to mature next week. So is there, I know in the past we sort of thought you needed to keep half of it liquid and half of it can go on deposit, but to give you an idea of where the rates have gone, if we went out 12 months at this point, the best term deposit I can access is 4.05% for 12 months. So it's dropped about 2% since we did that last one. Cash you're getting 3.5 at the moment, but as I said, I think that rate's going to come down. So just something to think about is, should we look to roll that term deposit for another, 6 to 12 month period?
Probably come back to you on that, Tom.
Yep, okay.
Happy to talk to you on that.
What I might do, Peter, is I'll send you the rates we can access for that, and maybe councillors can have to think about, you know, how much of that fund you want to lock up for how long to try to optimise the return.
Yeah, that'd be good.
Okay.
So that's maturing next week, Tom.
Yeah.
Yeah, it matures on the 26th next.
You've got the Reserve Bank on their business, so we want to do it pretty snappily.
Yeah, and I mean, look, the reality is you've got 500,000 in cash at the moment, 500,000 on term. So, you know, we don't need to wait till it matures. I think that, well, could be right. I think, you know, the risk of you having to draw down on that catastrophe fund in the next 5 days is probably pretty low. So you could, you know, you could look to move in advance anyway. But we are definitely seeing, you know, term deposit rates come down, as I think, you know, I think the realization is that I'm not sure what Miles said about the cash rate, but we're definitely going to 3, but, you know, we think it needs to go slightly lower as well.
Yeah, if you get some rates through to Peter, we'll make orders if I think.
Yeah, okay. I'll flick that through after this, Peter.
Thanks, Tom.
So look, back to where I was. I won't go through all of these, but I'll just maybe touch on a few that are, you know, sort of relevant. I think, you know, top left chart here, this just shows the huge volatility that we had, that big spike on the right hand side there, the top left hand chart. You know, just you know, when Trump, you know, we sort of refer to the 2nd of April now as probably the, you know, peak of globalization, and you know, we're unwinding and then we're putting it back on. And I don't think anyone's really sure quite where this ends up, but you know, Trump's life has been about, you know, a negotiation, and I think this is just another one of those little life moments for him, frankly. You know, and interesting in the last couple of days, obviously all the big retailers have been called to the White House, and they're explaining to him that, you know, prices have to go up, and he's asking them to wear the cost. And got a slide that shows us, but, you know, sort of economics 101, that, you know, tariffs aren't good long term for an economy, and I don't think this is any different. So, you know, with you know, a lot of people say to us, well, surely you knew that the tariffs were coming, and yeah, look, we knew that the tariffs were coming because Trump campaigned on it, but I don't think anyone thought that he was going to put 145% tariff on Chinese inputs in particular. And so, you know, that was a surprise, and that's why the top right-hand chart, that, you know, that it just went basically right off the Richter scale. So the second bullet point there is the key one, that, you know, there's a belief in the long-term harm that tariffs cause. And, you know, just some simple figures, for example, in the Chinese manufacturing economy, there's about 110 million jobs. You know, that's in the factories and the packaging and everything that goes around it. And in the US, there's about 11 million people employed in manufacturing, and they've got 5% unemployment. So it's essentially full unemployment. So you can't just replicate what happens in China straight to the US. And so, you know, we think tariffs will stay on at some level, but it's really about what that final level is. And I think Trump and the administration are probably just realizing at the moment that shelves will be empty for Christmas unless they reduce those tariffs, which is kind of what last week's you know, announcement was trying to do, was to have a temporary lull while they sort things out. But, you know, it seems that you know, the Chinese aren't particularly keen to engage at the moment, and so, you know, I think there'll be more of this will play out over coming weeks and months. This is just, you know, if you remember, there was a woman called Liz Truss, who was Prime Minister of the UK for about 9 days last year, when, you know, she came out saying that, you know, she was going to dramatically, you know, change the way sort of economic activity is done in the UK, and the markets went absolutely berserk, and that's kind of what's happening here. But that last bullet point's quite meaningful on the slide, when it says panic-stricken commentary is based on emotion and often has little analytical foundation. And I think through this period, it's been quite interesting to see, you know, a lot of people rely on fear and pain. You come back to that performance slide I showed you at the outset. You know, we've got a good quality asset allocation, good quality shares and bonds in the portfolio. you know, if you think of all the shares we've got, it's basically good quality companies that make a widget or sell a good or service that people want. They're well run, and we're going to continue to own those type of businesses because they're quite resilient in an environment like this. So, you know, we try to take emotion out of it and just, you know, focus on analytics at this stage of the cycle. This chart just shows the, you know, de-escalation that we saw last week, where the, you know, where the tariff is now back at 30%. Whether that stays or not, we don't know, but it's certainly a lot different than, you know, what it was. This chart I find quite interesting. So it's the top right hand chart shows what we call the 7 steps of maximum pressure, and we, you know, where are we now? We're probably, you know, Trump's now sort of at that 6 category. If I was talking to you a fortnight ago, I would have said he was at the 4, sort of breaking bread and making friends, and so he's at that sort of kiss and make up stage now, where he's trying to sit back down and negotiate. And where's he going to go? Look, we don't know, but he's definitely he's got some better advice around him. And Scott Bessent, who seems to be running the show there now, the market's like what he says, because he's far more level-headed than some of the others that have been there over the last couple of months. And so, you know, I think you know, markets are starting to accept that the tariffs are going to be heavily reduced from what they were, you know, when first announced. And that's that chart, bottom right-hand side, which just shows, you know, on that Liberation Day where they were, the current rate and the eventual landing spot we see is sort of somewhere between 10 and 20%, depending on the good and depending on the market that they're coming from. Probably don't need to go onto this. It really just shows that the economic damage for countries that rely heavily on imports to the US is quite clearly severe. Just on sort of, you know, I guess what's going to happen to the world. You know, GDP and earnings forecasts are coming down. So the start of this year, we thought, you know, US GDP growth was going to be around 2%, and global GDP growth, because more coming from some of the emerging markets, Asia in particular, was at around 3%. But we think that they're coming down. Are they coming down enough yet that analysts have recut their numbers for earnings per share for next year, for this year? You know, not yet, but we think arguably that probably needs to happen. And so you think about what's in the price here. You know, a global recession or a US recession is not priced in yet, even when the market was at its recent lows of, you know, sort of 4 to 5 weeks ago. You know, we think if you did have tariffs at their full level, you know, that maximum, for example, the 145 for China, then the S&P could trade at 4,700. To put some math around that, it's currently around 5,800. So it's significantly lower than now. But you know, given the events of the last week, we think that scenario looks less relevant today. So I guess the question is, what's a fair multiple for the S&P 500? So at the start of this year, consensus was around sort of 6,500 for that. As I said, we're at 5,800 now. So there's room to play on both sides, but we certainly don't feel that we need to be taking a lot of risk off the table, because we think there is, you know, enough upside to stay invested in global equities. It's just the Fed Reserve. So we've got a situation at the moment where obviously the RBNZ's cutting rate. So we've gone from 5.25 to 3, so 5.25 to 3.5. The Fed hasn't, you know, really moved their rates yet. So if you look at that bottom right chart, they haven't, you know, they've only come down from sort of effectively 5.5 to sort of 4.75, and they're sort of on pause at the moment. And I think, you know, that's because they're concerned about inflation, particularly in the US, and about inflation getting strong again as a result of these tariffs. So we don't think the Fed's going to suddenly cut rates, because, you know, the Fed is worried about inflation as well. we can skip over that one. Non sort of, US markets, I guess this is just showing, what happens to the global markets when the US, catches a cold or has a major correction like it did. And, the underlying line is just showing you sort of what sort of can happen. And in this case, we were at the bottom on the 19th of February 25 to the 4th of April. And so, global markets didn't move as much as they could have. Sort of the S&P was definitely down 17%. But if you go across some of the others, they weren't down as much as you'd expect. So the FTSE 100, so the UK market was down 8%. And as I said at the outset, we're sort of largely, recovered most of that move. So I think we're still overweight the US market from an asset allocation perspective. And there's several reasons for that. We still think growth in the US is strong. We think that it will get through this period. And the best companies that we want to invest in are listed there. They might not have all their earnings there, but they're listed. So, something like an Apple or a Microsoft, which we own in the portfolio, very much global businesses, but they're listed in the US. So I just always mention that because just because they're listed in the US doesn't mean that all their earnings or revenue comes from the US. This chart here is just really showing about the US dollar. So, what was unusual in this sort of sell-off was that all markets went down. When I say all markets, the US dollar was down, US equity market was down, and the bond market was down. Normally, you'd have one or two of those things sort of, counteracting everything. And so the Kiwi dollar sold down to 55 cents and jumped back up to 60, and it's currently around 59. If I think going forward, and this is important for, what happens with the likes of, dairy payouts and other commodities that are, made on the, made from the West Coast, is that we think the Kiwi dollar probably trends higher over the next 2 years. So we could see us going from where we're currently at sort of 59 up to 65. So I just mentioned that because, we've been in this relatively low currency for some time, and we may look to just trend a little bit higher. So the final one is just about, what's happening domestically. As I said, that top bullet point, the market's currently pricing OCR to trough at 275, and we share that view. We would have preferred the RBNZ to take rates lower quicker, just to try to ease some of the pain. And I think, the difference between our economy and our sort of neighbours is that, we've been in recession for the last 12, 18 months, maybe longer, and we're coming out of that. Whereas our closest trading partner, Australia, and the US to a lesser extent, is probably heading into a recession. And that's why I said earlier, we're looking to have more New Zealand equities, because we think we've borne the pain for the past couple of years, so we should start to get better. And the New Zealand equity market is relatively defensive. What I mean by that, we've got a lot of the gentailers, so, the energy companies in the portfolio. We don't have much sort of high beta, so those really high growth companies that are dependent on the US. And so, New Zealand equities typically outperform global markets during sort of high volatility regime. So, long way of saying, we're happy to be overweight the New Zealand market at this juncture. So I might just pause it there and see if we've got any questions.
Yeah, so Tom, just because what the councils are looking at today is your March report.
Yeah.
And obviously the March report had from the investment fund point of view, it obviously dropped down a bit from where we were reporting it. And so just for clarity for them, you're talking about now is a recovery plus from where we were in March?
Correct. Yeah. So that, so to the end of, so from the second bullet point there on that slide, you hope to see. So from the end of March to now, the portfolio is up almost $300,000 or 2%.
Yeah.
So the March quarter was a tough one for for the markets, but since then we've recovered to be up almost 300,000. So and what that in dollars and cents, what that means is that the portfolio value is currently 14.7 million.
Thank you for clarifying that, Greg.
Sorry, yeah, I always like to give you the sort of the most up to date numbers, if you like.
Oh, look, I think from my point of view, we've told them that it had gone down. It's basically recovered back to more or less where the fund was prior to that, plus a little bit. So I think it's from the council's point of view, it's just good to know that the recovery has taken place.
Correct. Yep.
Questions?
Questions from Tom?
Just one about the, do you think that the fund has kept up with inflation from its inception?
Yes, yeah, I do. I could. The reason I paused was because we had an extraordinary period of inflation from 21 to 23, where inflation ran at about 20%, so about 7% per annum. But we use an inflation number of 2.5%, long term in our terminal modelling numbers, and I think so. Right now, inflation's really low, and it was really low for the early period, 18, 19, 20. So answer is yes.
The next question is, how much do you think we can take out and still keep up with inflation to offset the rates?
Look, you would have to model that to give you an accurate number, but if you think the portfolio is, so if you think just in simple terms, say the portfolio is going to do 6 to 7%, or say 7%, and inflation's at 2.5%, have a buffer in there, you can maybe take out 3%, which would be 500,000. Does that sound about right? Is that enough?
I don't know, you don't know that either. TTTPP. No, I just want to know, we just want to be whole on our assets.
Yeah, I mean, we can, I can look to model that out to see what an accurate number is, if you want.
Yeah, no, that'd be good, thanks.
Okay, yeah. Spend after inflation, essentially. Yeah.
If we after inflation, you want to know?
Yeah.
Yeah.
Sorry?
So after inflation,
yeah. Yeah, after what I do is just put all our return assumptions in 10, for each asset class, and that spits out a number. So 6.5% less inflation, and that's the difference. Basically, you can spend.
Yep.
Yeah.
Tom,
Ewing.
yeah, Tom, when you spoke to us at the last workshop, you went on here and you're pretty accurate in what your predictions were for that quarter. Your prediction for the next quarter, will we get a return again around 300,000 to get over the 15 million? It'd be pretty conservative, wouldn't it?
Total money, yeah.
Is that you mean for the quarter ended 30 June?
Yeah.
Yeah, I think that's realistic.
Yep.
Yep. I mean, given we're almost there now, so it's a matter of and I'm not trying to sound like I'm on the fence here, but it's a really unusual market. Normally I'd say to you, oh, okay, we're pretty sure that the RBNZ's going to cut interest rates, and I think we'd all agree with that. But you just don't know what the guy in the US is going to do that can tip things around. And I say, that's why we're just in good quality companies that they're going to do well, and we sort of ride it through. But I think that's a realistic outcome.
Yeah. Any more questions from Tom?
No, just a comment, it's a really good report, Tom, and I've always been concerned that the the fund could be decimated by a crash, you know, but as long as you're in, it looks like you're managing it well, and as long as you're getting a good portfolio, I know we don't get the same return by going to high risk, but I think it's really important that we have safe investments and a broad portfolio there that covers that risk, you know, so we don't want to see the fund decimated, but on the other hand, we're not going to get the same return you do with risk. So as long as it's managed on those companies that are not going to fall to bits, I'm pretty happy, and it's great to see the fund growing and recovered after the turmoil that did happen in March. So really done well.
Here's a suggestion: split up DWC, but the money away. We'd end up with about 50 million. That would go a long way towards running the council. Just not doing anything where it is. Won't happen, but.
Recommendation. It is recommended. Committed to resolve, receive the report. Can I have a mover for that, please? Okay. Great. Thank you. Thanks very much, Tom.
Pleasure.
Thank you.
Catch up soon. Cheers all.
Yeah, absolutely. Thank you.
Okay. I'll try to get out of here.
No, we'll do 8.4, won't we? Yeah. 8.4. 8.4, West Coast Regional Council Investment Fund proceed to reinstate the catastrophe fund. So that's on page 40.
So I've given you a bit of detail around how the funds came to be, what the changes have been with those funds over the last 10 years, and obviously the effect of the catastrophe, because the question was around the catastrophe fund in theory originally. So what we decided to do is give you a bit of both, and I think some of the questions that were asked in this meeting with Tom was quite helpful for that process. The catastrophe fund currently sits at $1 million.
Yeah.
Plus a bit when we think about interest that is gained from that. It's the mechanism that probably isn't well defined around how we bring that back to the $1 million. And we can also, when we talk in this, we can also talk about, the 50% on a longer term deposit rather than necessarily just sitting there as cash. We can talk about that as well when we work through this paper. So what we're basically wanting to do here is to make sure we agree and resolve the actual rebalancing of or reinstituting the investment fund back to the $1 million. I think we all agreed that the $1 million was based around the the insurance excess that existed in the last 4 to 5 years where that put in place, and that's why the catastrophe fund sits at the $1 million. What we're looking to do is just make sure that there are no other questions before we talk about just the reinstatement process. Just looking for some feedback.
Yeah. That was brought up by you, wasn't it, Councillor Cummins, that it should be restated to millions?
Well, it shouldn't drop below it,
Shouldn't below it, no.
I don't mind if you would want to reinvest the money into it or
Well, I mean,
the interest rate, because it's up to anybody else. I think.
the revenue and financing policy that we've got talks more about the investment portfolio that we've got as far as taking the growth in that and offsetting rates with it.
Yeah.
When it talks about the catastrophe fund, it talks about those interest earnings being just incorporated into the fund itself and growing over time. Because when you think about the investment fund, the catastrophe fund, it was put there to be available on call to provide cash in the case of an emergency and getting things done. But it also was put in place for some of the non-insurance costs that may have been incurred as well. That was a word that was put in there. Right. So perhaps building up something over $1 million is actually worthwhile from the point of view of having a little bit more cash available.
Yeah, I look at it. The intention of the rapid reserve fund to access to get things underway, because we're all aware that government would be glacial in funding, and Westport's a good example. I think we should have an extra point there. It's understood by all councils on the coast that that is not a gift from this council, it's to get work underway. Now, we had the example in Westport where we had to spend double that to get the work completed in Westport. Now, I know we've recently resolved that and it's coming back. I think we should actually put in the writing, and maybe for the mayors and chairs, that just explain how the catastrophe fund works. And if there's a spend above the million, and it costs another $1 million to actually reinstate something, that the understanding is by those councillors through the mayors, that will be sheeted back to the ratepayers to get the benefit when it's to be put back in. Because at the moment, it's pretty informal. We're doing it on fingers crossed, and there's no free lunch when we've got to spend the money to protect them. Them that get protected, they should be fully aware that it's going to be on them to pay that back.
Through the chair, oh, sorry, your
Yeah.
first question.
And I'm pleased you said that, because I now understand the philosophy behind it, because
Yep.
last meeting, I thought, well, if we're just going to keep it there and not even spend it, that was my concern about it. But I understand the philosophy behind it now is to have it as a really sort of quick cash for exactly the reason that
It's useful. Yeah.
Councillor Ewan was saying, that we may need that money quickly to pay for repairs or some catastrophe.
And that happens from Haas to Karamea.
The Milton Brothers wall took nearly 12 or 14 months before it got sorted. And
when they got started before we actually.
So
because my feeling was it was sort of similar to what we're doing with the rate relief. I thought it was going to be that type of fund, so that we could actually use the actual money to get over the catastrophe. But it's not. It's to be able to supply a really quick grant, for do the job, and but it still has to be repaid by the benefiting party.
Yeah, so I think that is included in here as part of the resolution that we're trying to put in place.
That would be quite useful for future councillors.
That's B at the bottom of all that catastrophe fund thing, isn't it?
Let's go to the mayors and chairs.
Goes through a loan, utilise the normal council loan process.
And I think that's a good idea to clarify that.
Yeah. So it's clarification you're seeking from
Well, the clarification I was seeking is that the mayors and chairs, because they change every 3 years, they could change.
Yes.
I've got to be aware that's the deal.
That's the philosophy behind it.
Yeah.
Possibly Canara in there as well.
through the chair, I agree with councillor Ewan's sentiments there, what he's saying, that they need to be, the other councils need to be fully aware of how it works, and if there is an excess over that, it fully has to be paid back, So previous council that put the catastrophe fund in, I think it was an absolute fabulous idea. It played its part in Westport, and we all know that it took quite some time to get that money repaid back. So it's great that it's available. I think it should be inflation proof, because $1 million, just put that inflation on it so that it grows slightly, each year, so it doesn't get eroded, the value of what the work get done. And no, I'd support it, but I don't see too much problem in putting, half it in cash and half it in a short-term year-long, because we could always loan fund it if necessary, which wouldn't cost a lot more, because it's just. But anyway,
an interest bearing, you mean?
Hey,
It's half it and an interest bearing.
like he was talking about earlier on. Yeah. I mean, that's up to council side, but I think definitely, I think it should be inflation proof, just to keep building that to 5 years' time. $1 million won't grow the same amount of work of what $1 million will today.
I agree.
So,
Mr. Chairman, I wonder if I could comment.
Yes.
So councillors have quite rightly identified, what's been in place here is that the catastrophe fund is meant to be liquid cash that can be really accessed when we need cash to get in and do things. my understanding, Peter Miller, is that even if we do put half on a term deposit, we could always break that if we needed that other half, but we would always evaluate that against, what we could get the money out of LGFA for and make the right decision there. If an event like we had in Westport where we need more than $1 million ready cash on hand, we have the LGFA facility. It does take a bit longer to raise that as a loan, but we can get that. But the ready cash on hand, for the catastrophe fund will mean we can move really quickly. And then if it's more than $1 million, we'll go to LGFA. Councillors have quite rightly identified that up to $1 million or more than $1 million, if we need more than that, that's got to be paid back by the beneficiary scheme that benefits from it, and that's established here. I do agree that making sure that the mayors understand this, because as we know, for our major schemes, they're governed by a joint committee made up with us and the mayors. So that it's not just the mayors, it's the joint committee membership need to fully understand that, and might need to do an update paper to each of the joint committees as well. The issue with inflation, I personally agree that we need to calculate out and inflation proof it and build it to keep pace with inflation. The last thing I'll say is that when you read the guidance material from NEMA actually say you need to have cash on hand to pay your immediate bills, because NEMA do take some time to pay out if we're eligible, and they say that we've got to meet those costs up front, and we've got to pay those costs before we can actually claim, and that's insurance as well. So that's entirely accurate, a lot of the comments that have been made. Thanks, Mr. Chairman.
Thanks, Daryl.
I think the other part to it, through the chair, is if we are going to draw down the catastrophe fund, we need to be able to put it back reasonably quickly.
Yeah.
And so that was the other comment around utilising, in theory, LGFA, or perhaps using our investment fund as another option to do that. I don't think we want to leave it half there for any length of time.
No, and it could be drawn down.
But I think if the rating districts and the other groups are aware of it, that's what we need to do. Is once you've got the done the deal, you need to go back to the committees and that, and then put it on to them to make their decision, that they know that it's got to be repaid. Because we dilly-dallied a wee bit with the Westport one.
Well, that was complicated to have make the rating district with existence.
Yeah, no, that's what I mean, but we're still doing it. Because quite often you get one flood after another. And here it is.
Chantel?
Just want to make or clarify and make this very clear. The intention here that if the emergency fund or the catastrophe fund of 1 million is drawn down, that be replenished in the first instance, and if we have to draw down more than 1 million, then the catastrophe fund also has to be repaid.
That's what I understand. Is that correct?
That's correct.
Yep.
Thank you. Just clarify.
Yes. Any more questions? No. Okay. Recommendation. It's recommended that committee resolve to receive the report. 1. 2. Note the current revenue and financing policy long-term plan 24 to 34. 3. Agree that there should be a requirement to utilise the catastrophe fund in full or part due to the catastrophe event. That reinstatement of the catastrophe fund of $1 million is achieved through a targeted rate to those receiving the benefit. And 4, agree the initial reimbursement of the catastrophe fund should be achieved by drawing of funds from the investment fund.
So we could put either the investment fund or LGFA funding.
Yeah, I think either LGFA funding or investment fund. Yep.
Through the chair, do we not have to put something there if the spend is more than the 1 million above? That is inclusive to be paid back. That's the key to what we've been discussing.
Yep. Yes.
make the separate number.
But the
five.
minimum is 1 million and then it'd be over and above, I think, wording in there. And
So we have a number 5 or add something on.
I probably change number 3, so it's got 1 million achieved.
Anything
I'd like to actually add a number 5 just to, which would say, provide clarity to the joint committees of repayment of any drawdown. And that covers all, you know, so provide, to the joint committee. So we just provide clarity. on
Number 5.
Okay.
Everyone happy with that?
Yeah, you're just talking about a couple of different things. So councillor Ewan was talking about the clarity of, if it was more than 1 million, that they also had to pay back any excess over 1 million.
Yep.
So you want that added into number 3,
No, number 5.
number 5. But then councillor Haddock was talking about something else. So
So it's going to be, provide clarity to joint committees, to all joint committees. It's the major one of repayment of a catastrophe fund and funding above the $1 million.
It's the same thing.
okay, sorry. That's my fault.
So they're clear that it's not a gift or a loan, it's a.
Have number 4 in there.
Okay, great.
Agree that the initial reimbursement of catastrophe funds should be achieved through drawing off the investment fund. Shouldn't have been withdrawing off LGFA or something.
It could be either.
It could be either, we put down either.
Change investment fund or LGFA
LGFA.
funding.
We change.
Slash on that two complications.
Yeah.
Because it'd take a while to get it out and then put it all back in, wouldn't it?
I haven't actually done that yet.
That's your answer.
Can I have a movement for that, please?
Yep.
Peter Ewan,
Have a second.
Peter Haddock, all agree? All right. General business. General business? I move that we go into public excluded. All right, taking into that. Andy?
This is going fine, isn't it?
We just move into this, get this finished first.
Okay,
Yeah.
yeah.
It's not right.
Yeah.
Okay, well, hang on.
So,
Tuesday, 20th of May. Do we have any apologies? Oh, what about Daryl and stuff?
People online.
Oh, we're waiting on it. We'll carry on.
You carry on.
Okay, any apologies? No apologies? Move it? No apologies, move it. Declarations of interest?
Yep. Andy.
The Wanganui and French Joseph.
Peter?
Frank Joseph and Graham. Take one.
Hang on, what was yours, councillor Campbell?
Wanganui and French Joseph.
No public forum, no questions, no declarations. So we'll move on to confirmation of the minutes. 15th of April, 2025. I take it everybody's read the minutes? Do we have anything, someone to move the minutes?
I'll move that they're a true and correct record.
Second, no?
Let's see.
So anything coming from the minutes? We'll give it up. Move on to the action points. Okay. Actions list, page 18. Item 1, Mulberry Rating Scheme capital upgrade proposal to be completed for councillors and the RD at the upcoming annual meeting. Thanks. We still want that on there? We'll take that off.
It's going to be presented to the council at the June Operations Committee meeting. Chair.
All right.
I'm going.
Got one done, right up. Number two, provide register of non-orphan assets accounts, it's ongoing. Provide councillors with, number three, provide councillors with the 5 conditions used to lessons from Moira, that's done. 4, provide councillors with previous investigations of Orowaiti River mouth management. Complete. Item 5, staff to review provisions on the TTP regarding subdivisions and engage with Grey District Council about water runoff. That's ongoing. Staff will adjourn. Got a move for that?
I'm happy to move. Information noted that items 3 and 4 be deleted.
Seconded. No. 8.1, Rating District Consultation Summary. Too much reading.
Sure, so I'm just providing you an update of the consultation we did with the rating districts. Purpose of the report there is to provide you with a summary of the engagement, have a decision made on the rate setting, and there's recommendations on how we move forward with the insurance coverage for the infrastructure asset.
Recommendations to receive the report, note the attachments in the minutes of the 19 rating district meetings, note the feedback provided on infrastructure insurance, note the adopting and signing rating district agreements, the 17 districts having signed agreements, they're all signed.
We've got 17 of them signed, the 2 that aren't are Rough Creek because they're going into abeyance, and also Red Jacks because at the meeting they wanted more consultation around decision making.
Right. And we're going to do all these individually, Mark? Yeah.
Just if you go to page 92, it's just the correction I got there. It's B Cummings, not P Cummings. Apologies. Neil's Beach. Noted.
Yeah.
Detail.
Sorry.
There's a few other ones I found as we go through.
Yeah, but
Do you want to do all these one at a time? So if we
I'll
start
take
with-
Deanne's. What would you like to do regarding changes to the minutes?
Minutes are done,
Uh,
aren't they? We've done
So-
minutes.
So just so you're
Oh, the
aware,
minutes of the
you're
meetings.
noting the attached minutes, you're not approving the minutes. The minutes can't be approved until the next round of rating districts. So at the next round of rating district meetings, we'll make changes with the committees. But we're just giving you an overview of what's happening at those meetings because we're aware not all councillors were able to attend all of them. So it's the opportunity for you to be able to see the context of what happened.
they're all reading it.
Through the chair, would it not be better to do some recited now? Done for when you get the final one?
Yeah, I mean, I can take notes and then
Yeah,
I'll go to Shani's thing and I'll make sure they're corrected for them.
One that I spotted there, regarding True Macau settlement, councillor Haddock was present because he moved and seconded some of the motions when he's not on attend. So he must have been.
Page 73.
Hold on, if I may ask.
Laura, we're going to go through one at a time.
No, don't think so. Like Sandy said, through the chair, they're only there for councillor
We've read them all.
information, you know, the
Yeah.
ones that weren't
Does
attended.
anybody want to go through any particular one?
I've got a comment on rejects.
Page.
What page is rejects?
7. Okay. See down the bottom there with this comment on the rock below the Kiwi Rail Bridge. Now, the story of this rock is, I've gone back through my files, see how yellow it is? It's over 30 years old. That's a resource consent that I got to realign Rejects Creek. Now, when the creek was realigned, it's an old, 100 years old. They didn't know how deep the piles were. So they put a condition on the consent that I put a rock weir below the bridge so it wouldn't get scared out. They've since built a new bridge and that rock was repurposed into the abutments of the new bridge. Nothing to do with me, it was my rock. When I look back, I can read you I'll quickly read you the conditions on the consent. Number 6, a rock weir will be constructed downstream of the rail bridge to prevent channel degradation. Goes on, there's a few more things. Anyway, I had to have a stockpile as well. So also had another stockpile. Yeah, there's a condition there with stockpile. So I ended up putting the original weir in, and then I put the stockpile in. There's about 2,000 tonne of rock went into there. Now, at this day and age, probably cost you $50 a tonne. That's about $100,000 worth of rock. Now, that rock was taken and put into the new concrete bridge abutments by Transrail. What we've got here is the Rejects Rating District claiming it's their rock. And they've basically been accusing me of going in and stealing it. Well, I haven't stolen. It was my rock to begin with. And if anyone's out of pocket, it's me, because Transrail put it into their bridge abutment. I see there's in the action points, somebody has to go and research what happened to it. Well, that's what's happened. Now, this needs putting to bed. I've been putting up these accusations for about 2 or 3 years now. They need to be put to rest. In the action point.
Take an action point.
So
this has been going on for a long time.
Yeah.
And we've explained it to the Rejects Rating District many times what's happened. So how do we finish it? How do we close it off?
So just so I get an understanding. The rock you had there, say it was should we just say 1,000 tonne, was it?
Probably 2,000.
Okay, 2,000 tonne.
1,000 tonne and 1,000 tonne stockpile.
Righto.
Then it settled, put stockpile in.
Righto.
Okay.
So then they built a new bridge, Kiwi Rail,
Yes.
and they used about 1,000 tonne on that?
No, they use it all. There's none left.
Oh, right.
Everything's gone.
So what are they accusing of?
Well, not Kiwi Rail. The Rejects Rating District are
Yeah.
saying that's their rock. It's not their rock.
So they should be attacking Kiwi Rail, not.
Yes. Or I should be taking.
So it's just a misunderstanding, is that what you're saying?
Well, but it needs clearing up because we've told them, we told them years ago what happened, but I see here action points.
I read it, but didn't really understand it.
Find out what's going with the rock. Well, I've been telling them until that's where it is.
Every rating district meeting they have is going on that it's the only river on the west coast where the gravel's dropping. That's exposing old stumps and all the rest of it. Since I've taken away the weir that Alan put in, or Kiwi Rail took it away, the gravel bed's dropped. So that's what they're worried about. It's because it's exposing some of their rockworks, bits and pieces upstream. But it's nothing that Alan's done to make a problem. But someone really needs to go to Kiwi Rail and do it. But eventually, if you just leave it, it'll come back. The gravel will come back.
Yeah.
Because the same as if you look at the White Mangaroa River, with the rock bank here, it's the same thing. You know, if you took that away, it dropped the river. Darryl?
Yeah, Mr. Chairman, I wonder if I can make a comment here. If I understand this correctly, a private consent holder had a stockpile of rock and through a private consent had built a groin, and that totaled 2,000 cubes. And if another party, i.e. not the regional council, another party has come along and taken that rock for their own purpose, and that's now in dispute, around the ownership and the cost and payment and those sorts of things, all of that is a civil matter between the two parties. And I'm struggling to understand what is the role of the regional council here.
Look, all I want to do is clear the matter up. I don't care about the rock. It's gone to a good case into the Kiwi Rail abutments. I just don't want to be continually accused of stealing this rock, which is the accusation that's coming from the Rejects people. It was my right to begin. Anyway,
Andy?
it's part of this consent here.
Andy?
Transrail would have got a consent to repurpose that anyway, wouldn't it?
Very likely. Very likely. I don't care what they did. I just don't like this accusation. It needs to be cleaned up.
Can I make the point that that's cleared up between councillor Birchfield and the area engineer, which clarifies that for the next rating district meeting.
Who did you put it in for?
It was a condition of a resource. What happened is Red Jacks Creek used to head sort of like north up river. I straightened it and I shoved it straight out to the river. But of course, there was an old railway bridge there on wooden piles, and they were concerned about it, taking the piles out. So I placed all the rock just below the bridge to make a weir. But of course, 10 years or more ago, they replaced the bridge with a new concrete one with deep piles. So they cleaned it all up and they shoved it up into the abutments and all around the place. This way.
So it won't be affecting anybody anyway.
No, it's not affecting anybody.
So just a clarification, I appreciate what councillor Birchfield said. Was the consent that he got all those years ago under his name or the dredge?
It was under Birchfield Minerals, my company.
That's what I mean.
I owned the rock. Not the Red Jacks
Okay.
rating district.
Well, we'll move on, then. Thanks. sir.
Okay, good.
We'll make that an action point.
Yes.
That the area engineer will say, and do I want to do up a bit of a report, Darryl, about the effects on the river or anything, or just the gravel will come back? It's bound to. It's just that that's when they've taken the wall out, the gravel's gone. It'll come back. It's got to.
Got a copy of the consent there.
Okay,
Okay, thank you.
move on. Any other ones? Get any other?
Can we just go to the Wanganui?
What page?
Um,
Through the chair, I think these actually minutes, which Shanti's actually clarified, are actually here for the purposes of just so we could get the actions from both the insurance and the signing of the rating districts, just the approval of that. So, I think the proper thing is at those rating district meetings to actually would take an Allen's one, but I don't think we purpose this meetings to go through each one of those individually. They were provided as an information for the members that didn't attend those meetings, so they could see the outcomes that's related to this. The purpose is to provide the committee with a summary of the rating district engagement undertaken and provide the committee with the necessary information to enable rate setting decisions and insurance coverage. Background for everyone.
Through the chair, we can't make comment on meetings we never attended,
No.
but we can read the information that was there.
But if there's any questions to ask, it's a good time to ask. If you weren't at the meeting, you've got a question to ask, it's a good time to ask it.
or we're going to have general business.
Oh, I don't mind. What do you think of Wanganui? Is there any other rivers that anybody wants to talk about? I want to talk about, our waiting one, something?
No, the Morgan's Island contingency.
Well, I'm okay with that. They're not going to be long.
No.
And, page 153, the translation column, you've got, Peter Dentity, it should be Peter Dennehy. Pete.
Okay. What page are you on there?
Okay, Andy. All right.
Just John Sullivan. He's been asked to been consulted on the South Bank works for the Wanganui Bridge, and he's okay with that. Leave about the spur on the north side that's throwing the river into the south side rating district.
Right.
And Transit are trying to say, well, it's not having any effect on them.
Right.
So he wants that looked into, and he wants to know who give them the consent to put that spur in.
Anyone want to comment? But otherwise, we just take that as an action point, I guess.
I believe it was done under emergency works.
By EZT.
Yes, I believe so, but we can get back to that.
It's still be consent.
You all right with that, Darryl?
Yeah.
Yes.
Have you heard about it?
Could I
We'll
just
take
make,
that as an action, we'll take that as an action point. We'll find out some more information that we give back to John Sullivan
could
about the spur.
I just make the comment for the clarity of the minutes? is this more of an issue that could be recorded under the general business part of the, or is it really belonging on to this paper that we've got before us?
Well, we do it under general business. One way or the other, so yeah.
Just to record it for the minutes, thanks. Yeah.
Okay. Then so go on to the evening.
The Albans Island contingency fund, that would be the same thing, general business?
Yeah,
Not-
yeah,
Perfect.
just trying to find the end of it, so.
So if we're happy with the rating district meeting minutes, I'll just say if you have small changes, it is good to bring the rating districts back minutes that are correct. So happy to receive them from you by email. We can just make those minor spelling changes and things as we go.
Yeah.
The third one down there is note the feedback provided on infrastructure insurance, and just apologies here. I realize this recommendation is a little confusing. So that is in relation to table 3, which is page 28. So there is extensive information there about insurance. As you know, we went to nearly all of our rating districts with their with a paper highlighting insurance. As a summary for that feedback, for those councillors that weren't able to attend all, 2 of our rating districts aren't currently paying for insurance. Their insurance is covered through the general rate. That's Congahu and Neils Beach. Both of those rating districts confirmed that they saw no value in the current policy, one being a drainage scheme, and the other having a really small asset, around $10,000 as a sacrificial fund. And they would advise to opt out if they were asked to contribute to premiums. 8 of the rating districts saw justifiable value. I tried to characterize these into why I saw them making these comments, and the ones that saw justifiable value often had quite a high scheme asset value overall, over $5 million, which meant that $1 million excess was less concerning to them. Or they had really low premiums, therefore it was a negligible rating impact, and they sort of thought we might as well pay it because it gave them certainty over that NEMA contribution. At that point in time, those were the thoughts, though there's several other factors that they have to meet to be able to get NEMA, which I'll address further down. 4 of the rating districts saw very little value in our infrastructure insurance policy, those being Taramako, Kōwhirarangi, Wanganui and Vine Creek, often citing those high insurance premiums relevant to their low ratepayer base. So Taramako are paying $22,000 annually, and I think it's about 10 farms that covers, so it's quite a significant impact to them. Those premiums are seen as a significant burden, and the ratepayers found it potentially more beneficial to build a prudent reserve than paying those insurance premiums. They also, quite a few of them had a perception that actual damage exposure would be much lower than the assessed capital value. So their capital value might range between 5 and 23 million, but their damage exposure they saw is a lot less than that. It's very unlikely that the whole scheme is going to be impacted from their opinion. Other districts also mentioned that they felt they were more likely to be faced with a localized event. So as you're aware, our insurance policy that hits multiple schemes, we can divide the excess among those schemes. These schemes sort of thought, we're likely to be hit by a localized event, and then we're faced with the 1 million. And therefore, that's a significant obstacle for us because we're not going to be able to pay it. The remaining 4 sort of had conflicting views, and really a lot of the conversation was about their ability to access that NEMA funding. A lot of these schemes sort of had potentially low capital asset value and potentially unlikely to claim. So Redjacks and Whataroa both had a total capital asset value of under 2 million with a 1 million excess. The likelihood of claiming on that is very low, or high premiums relative to a low rating base. So again, you've got Nelson Creek, very few ratepayers paying a premium of $6,500 per year. So those rating districts really said that their value in our policy was around their ability to access NEMA funding. So we went back and got some clarifications on NEMA because there was several questions that came to us from the rating districts. One of the main ones was the clarification on NEMA thresholds and excess. So NEMA also has an excess. So our insurance has an excess, but so does NEMA. And that's based on 0.02% of our total regional capital value, which currently is 228,000. Just noticing that will go up as the RCV goes up. So they'll only pay 60% above that. So the rating scheme has to pay the 228 and then 40% of the remaining amount of the damage. And only up to the $1 million excess of insurance. So after insurance kicks in, NEMA don't pay anything. So it's actually quite a small window of which NEMA pay, if you think about it. The term sufficient funding, I will note that we're still working through some of these things with NEMA. It's been quite difficult to actually nail down exactly what they will offer and when. But basically they've said that sufficient funding would be the ability to cover the 40% and also the 228. So having proof that you're able to cover that. But they would need extensive reasoning of why a scheme wasn't insured if it wasn't. They did say that the co-funders would be considered as part of the 40%. So those schemes that are part of KiwiRail, have KiwiRail contributions or NZTA, they will count that. So that's good news story. One of the key things here though is that NEMA recovery programs are retrospective and it's reimbursement after being paid. And they may take several years to assess. So although you can access that funding, the council will have debt up to that point, or the rating district would have debt. And it's for like replacements, which aligns with what we've communicated to rating districts today. If we have issues with claiming insurance, NEMA need to have clear explanations as to why. And the last one was just around rock stockpiles. Our rating districts wanted to know if they could consider rock stockpiles as part of NEMA, they're 40%. So NEMA have said no, that doesn't count because they're not insurable assets. But if it was used for emergency repairs, they might consider it as actual costs for the repair, but there's no guarantee around that. So table 3 basically gives you an overview of kind of what I've just explained. I've also just put in the prudent reserve of each of the rating districts because I thought that was quite interesting. And there seems to be some sort of, actually it's probably a poor correlation there. You've got, you know, Waitangi Tona with a really good prudent reserve of 400,000, but they still want to be insured. But they do have a total asset value of 7 million. What we're recommending here is that we collate all this information, present it back to the rating districts, particularly those that see little to no value in the policy, write them up a formal letter that presents this information clearly. And if they would like to be removed from the insurance policy once they understand all this information, we would need them to sign that officially, and then that decision will come back to council for approval. Council does hold the risk and are the decision makers on this.
Peter. Shanti, at the rating district meetings, a lot of the concern was about the value of the asset value that's assigned to those. Now, we just use Wanganui as an example, $38 million. That's the what these rating districts are saying, and what is logical too, is it's very unlikely that we're going to have the likes of a house fire where the total house or total assets destroyed. In that situation, have to be a massive flood to destroy the whole thing. And it's more than likely or more than probable that it would only affect a part of that $38 million. So it might only be 10 or 20%. So that's the beef, I think. A lot of these rating districts are saying their asset is overvalued because it is highly unlikely, unless it's an earthquake, that the total asset would be destroyed. could you comment on that?
Yeah.
Or someone else, or?
Do you have a comment on that, Daryl?
The first comment I'd make is the asset value is the asset value. So that would never change. I mean, what is it on the Wanganui, Andy? 16 kilometres of flood bank. What is the asset value of that? What I think they're talking about there is there a possibility of only taking out a partial insurance to a lesser amount of the total value of the asset? And that's an insurance question, not a valuation question. Would that be right?
That's the answer, Daryl.
Yep.
What they're asking is whether they can insure for a lesser sum.
Okay,
which would mean the premiums are going to be less,
Yeah.
It's like when you insure a car, you don't actually have to insure it for the full cost. You can just insure it for what you think it's worth.
So we can take that question to our insurers and ask it and come back with that answer. So we can take that as an action. Thanks, Dan.
Could we have that before we go back to those rating districts? Because that
Yes.
was a question that was asked on quite a few. They didn't see that they should be paying an insurance value on that total asset value, So looking at Wanganui, they would be paying the insurance on 38 million. They're saying that's. I think you've answered the question.
Through the chair, would there be a formula that you'd work on so it would cover most of your rating districts? Would it be like a 50% or a 20% or a 30%?
That's a hard one because it depends. Lots of the rejects, one that broke over the rejects, it'd only be a scale of the width of the river, they'll go off down the road over transit through Kiwi Road.
Right.
And to fix it would probably cost you 30-40 grand. The Terra Macau one, they said the last time it overtopped, it cost them 60 grand to fix the wall.
Right.
And that's what they're saying, that's what they're saying about their prudent reserves. They keep putting the money in, they'll have enough if it overtopped or even, without. It just seems like a lot of money going to an insurance company for.
I agree.
I've sort of tried to self-insure before myself, and the first time we did it, my wife wrote the car off. So, it's a hard call, but it's at the end of the day, it's their decision.
Also, with rock work, not so much embankments or stock banks, they can be repurposed again too. So you're not introducing new products, you can repurpose it that's blown out in a lot of cases.
What did you want to say something?
And as you were saying before, like some of that gravel was valued at what? $28 a
24.
$24 a cube.
$24 a cubic metre when there's a contractor will replace that for $5.
I know Stan did the valuations and I just, some of the rating districts are questioning the actual total value as well. Start before you.
Yeah, it's inflated the value of the bank, really just because of the price of the material.
Through the chair again, if I could just add to that, there's so many variables on the various rating districts as well, and some rating districts are unlikely to have an asset that's destroyed, and others are, if I could just use like Punakai, for example, a really big storm surge could possibly wipe out, damage half of it, and its value is 5 million. So that rating district might choose to, insure half that value or something, not a very minimum, but so they're all quite different.
It's going to be pretty hard to convince the insurance what half you want to insure, though, isn't it?
Yeah.
It's going to break.
Back doors or the front doors?
Sure, the other half.
Not that
Half different transits. But I guess that's something like all rating districts, all rivers are different. It's probably an individual call. There's lots of Waitangi Tona, they've got power company money going into these as well. And each rating district has different reasons to be protecting or what they're protecting.
Exactly.
And I think half the issue is that insurance premiums going up heaps, don't they?
They never go down.
Yeah. What they reckon they're going up 25% this year.
Certainly the feedback we've had from is if the scheme values stayed as they are today, insurance would not rise.
So that's a message from the market.
There was a slight indication, it was like a one, that wasn't significant. That shouldn't tell.
Yeah, I'll just state my position. I don't think it's worth insuring these schemes. You're better off to put that money into your prudent reserve till you get an event. You're not going to lose the whole bank. You're better off to put that money into either maintenance ahead or repairing afterwards. And there's the issue with the excess, huge excess, which no scheme can afford to pay on its own anyway. So it's got to be almost a global event to get enough damage to justify the excess. So I just don't think it's worth it. Thank you.
Any other comments? I'll just put the last comment, but maybe we could get together and have a bit of a workshop on it. Like, we've got the catastrophe fund, we've got access to LGFA. To put their money in their prudent reserves. There is a catastrophe, say, wherever. We could use the catastrophe fund. We could apply to the LGFA for the money to put back, use up their prudent reserves. And
yeah,
because what's our insurance premium for the rivers each year?
I couldn't tell you.
190,000. That's going out of our region that could be going into
258, yeah, is the indication.
258,000 for insurance.
$250,000.
Then you've got the excess on top of that, even if you get a claim.
Yeah, and on top of your excess as well.
What's that, $1 million?
Yeah.
Yeah, so.
But then part of that is that to get the NEMA funding, you've got to have, and that's been spelled out. But, you know, going back to the start here, we've been to all the rating districts and explained it all. We've got quite a few number here that have said, yes, we want to insure. So they're all printed out in green. So what Shanti's done that table, but Shanti, what you're saying in here on item 3, which is regarding the insurance, you're saying that you are going to go back to those rating districts that aren't that haven't approved. You're going to give them the cost, and then they'll decide whether they want to be insured. They're going to come back to the council, and then the council will make a decision on the insurance. We're not making that today. We're just noting the feedback provided, and so that's the story. We're not actually setting insurance today. You're going to go back to those rating districts, and then you'll come back to the council.
Once we collate all that extra information as well, but I do think that the workshop is potentially a good idea with council.
Yep.
Mm-hmm.
And there as well from insurer.
That would be great. Yes.
Insurer there as well.
Yeah, and possibly a NEMA person. Because if we can insurance, whether it's Aon or self-insurance, it's still insurance. The money's still there, isn't it? And you've got all the NEMA are worried about them having the 40% to pay their 60%. It gets up to insurance. Well, if there's no insurance, it keeps going up.
Because it is worth noting that more rating districts saw value than didn't, and we didn't consult with the joint committees who all have asset values of over 24,000 million. 20 million. It's a big number.
Different, I think, with just rating districts. So,
because one thing we were saying is we had to see what, if half pull out and half go in, Shanti,
What the impact is.
for the insurer.
So that we'll need to pose that to the insurer as well. Although the premiums are based on total asset value. So if they pull out, the total asset value decreases as well. So you shouldn't see an impact, but I don't. We need to talk to the
The
insurer.
insurer need to be here, wouldn't they?
Yeah.
we'll take those action on the workshop.
Yep.
Insurance people, NEMA. Who else do we?
So there's an insurance paper going to the next RAC committee.
Yep.
And so we'll try and incorporate some of the questions you've got here into that. So we get a bit more clarity before we get it down and doing it workshop.
Through the chair, because if you've got enough people and enough rating districts, you almost are big enough a mass to become self-insured. You really that's how an insurance company works. The more they have, the statistics work out that we've got 1 million people, and you're only going to get sort of a few of them get affected at any one stage. So if you had all the rating districts self-insured, then I think you'd just about quite quickly see whether it's worth self-insuring yourself, because over the whole district from Karamea to Hearts, you might get, one or two stock tanks blow out that the others, because they're all putting into that common fund.
Because a lot of them might not be blowouts either, they could just be top-ups or fix-ups or whatever,
Or should be done under maintenance.
Well, it would be done under maintenance, I mean, that's the thing, isn't it? Like,
And we could have a $250,000 kitty a year, couldn't we?
would anybody know how many catastrophic events we've had in recent times?
I would just like to, through my experience. Yes, but most of the damage, like in the Wanganui and Southwestern, has been done because of lack of maintenance or not getting on top of the maintenance quick enough, and that's when we've suffered most of the damage. Except for like Raymond's Bank where there was no rock. And down the bottom of the scheme, there's no rock, and that's the river decided to come in after 30 years and have a go at it. But anywhere we've been armed, as long as we keep that topped up, we haven't got a problem. And when we let it get a bit slack, there's the Wanganui Bridge, they knew about that. Should have been topped up with rock, but no, wouldn't do it. The Friends Bridge, same. They knew about that, didn't do it, and then you lose it. Just through not doing the maintenance.
We've got our action point.
Yep.
Association.
Yep, we've got a couple more recommendations and reports, quite a large report. The next one down, I believe, was just to note the adoption of the signing of the rating district agreement. So that went really well. We've just got 2 more to sign. I just mentioned those. Oh, sorry, 1 more being Redjacks, Round Creek going into abeyance. So no need to sign that anymore. And the joint committees all have their own terms of reference, which are well underway through Diane. And the next one is in relation to the rate setting. So we have made recommendations in table 1 of what to do. This table might need some explaining as well. 10 of the rating districts supported the rate that we proposed, whereas 6 requested an increase in rate and 1 requested a decrease. 1 is entering abeyance. So quite often the schemes would say, oh, maybe we should put a bit in, and that was aimed at trying to build their prudent reserve because their prudent reserve would be lower than where they wanted to, which was good to see. So the one that has requested a decrease is Nelson Creek, and they have quite a healthy prudent reserve. So we are suggesting that that's potentially okay. They're requesting a 0 maintenance rate. We're still going to rate them for insurance and for engineer cost recovery. Those were not being consulted on. We explained what the engineer cost recovery would be. We proposed a number, but they'll be charged actual costs. And insurance, if a decision was made not to insure a scheme, which we don't have to make till November when our policy renews, then that money that they're rated for would just build their prudent reserve. So we explained that to them. So Nelson Creek's prudent reserve is at 191,000 at the moment. And so they're the only ones that had a decrease. Happy to answer questions on the table.
You want to do all this in one load? Yep. So
I'm happy to move. The
motion of the rates. The rates are set as per table and table 1 for each of the rating districts.
Corporate services question, no, we're setting the budget, right? Great.
The rate take, aren't we?
The rate setting recommendation.
Rate setting recommendation, yeah. You happy with that?
Well, normally we'd do that when we set the rates in total. I think all we're asking today is for you guys to, the councillors to agree that those are the rates that you're happy with.
Yep.
I think it says it clearly. Approve the rate setting recommended by staff. So
we're approving the rates. Is it right?
Or do you want to rewrite
That'll be one less thing I need to do, probably,
Number
from the point of view of
Second.
the setting. process.
Alan's setting it.
I mean, as long as they don't change after this point, we should be fine.
Yeah.
This maintenance as well as loan.
No, I'm just doing my,
Just-
per table one, outlines engineer cost recovery, insurance and maintenance.
So that's fine. You can do that.
You do that. Okay. Favour? No one in favour? Aye. Right.
And that's all.
Source from you, Sean.
I'd just like to say thank you, Shanti, because it's actually a very good paper and very clear, you know, it's just it's so good, you know, so a lot of reading, but
Yeah.
it's great to have a full back.
And thanks to Lil as well. with it.
Yeah.
Huge effort in doing all this.
Can I just bring up one point here?
Yes.
South side.
General business.
General business.
General business.
Oh, we wait for that.
Yeah.
Yeah, right.
Okay. Let's try anything. Do the same again next year, eh?
This year, won't it?
Well, we're on page 208.
We're not doing fantastic joint committee. 153, Greg. Franz Joseph Joint Committee. Oh. Yeah, through page number 1.
Page 147.
147.
Shit, it's been worse. Just ahead.
And yeah, afternoon all. I'm sure you are over and done with operating district summaries.
It's up there.
Now got the companion paper to Shanti's one about rating districts, and this one is about or a summary of the joint committee meetings and their outcomes.
How to follow.
Correct.
Well, so the recommendations. Report summary is just posted. Received report, note the attachment minutes of 4 joint committee meetings held for 24-25 financial year. Note the feedback provided on infrastructure insurance. Note the endorsement of 2 joint committee agreements that require revision for this round, Braymac and Westport. The council's approval of those agreements. Council meeting 6th of May 2025. Approve the rate setting recommended by staff for the 4 rating districts presented by the joint committees as detailed in table 1. And approve resolutions made by the joint committees set out in attachment 5. So we'll do all those one at a time, eh? That makes sense? Yeah.
A lot to take in otherwise.
Yeah. I don't know, quite a lot, Tom.
Okay, as far as the minutes are concerned, I wasn't intending to take you through those in any detail, same as for Shanti's paper. These are provided through the info.
Yep.
And they'll be confirmed at the next round of joint committee meetings. However, if councillors do see things that they feel are in error or incorrect, there was one earlier about Peter Dennehy's name, happy to take those and amend those before they go back to the respective joint committees. As far as item or recommendation 3 is concerned, while we didn't take quite the same approach with the joint committees over insurances that was taken with the rating districts, we did discuss insurances with 2 of the 4 joint committees, and both of those joint committees did that they needed to ensure we continue to do so.
Not allowed to scale, aren't they?
Recommendation 4, the only thing I wanted to speak to here is, other than because you've already been spoken to extensively on this one from a separate paper to council on the 6th of May, is that most of the joint committee agreements now provide for more than 1 meeting per annum, so that increases the number of opportunities for consultation with those rating districts. And in the debrief yesterday, the debrief we had yesterday about the latest round, We talked about scheduling and how we make it work against the other activities that need to occur throughout the year. I think the last two items or recommendations, 5 and 6, are probably the ones that need the most discussion amongst yourselves. The first one being the rate setting. And on page 150, table 1, we've set out what the proposed rate strike was by staff that was taken to the respective joint committees. And then what the joint committees, rather than rating district office, recommended the rate strike to be. We wound up with 2 agreeing with what staff had recommended, that being Hokitika and Westport. With Greymouth, it was agreed to reduce the rate strike by 40k to remove the regional council contribution to the Cobden, Seawall and Range Creek project plan from the rating district, and so we'll be seeking to fund that through the general rate. And staff have no complaint there, so got that one to you as endorsed by the joint committee. I think the one that's going to involve the most discussion is for Franz Joseph, where staff proposed a rate strike in the region of 265,000. Following extensive debate, the joint committee landed on a figure of 150,000 for engineer cost recovery, insurance and maintenance. So the maintenance component in there is around $80,000 for the year. Unfortunately, the joint committee didn't have a couple of bits of information that would have been helpful to them in their decision making at that point. The first one was the cost of complying with the consent for the North Bank. And I explained to councillors that attended that meeting what that was worth in a later email. I think for next financial year it's in the region of 35,000.
We just want to run by people like that, isn't it? That's to get an independent engineer.
Correct.
To certify the wall.
To monitor
the wall.
The wall for the first 2 years of its life after it's handed over. And correct.
The agreement from Scenic
Circle. Yeah. So the cost falls on them because it's their request. No, but
falls on them.
Everyone, but it's not due to.
They are part of the rating district. They are part.
Through the chair, they are, I understand why they dropped at that time when this was done, but are they aware of the acceleration that's happening in the tar pits now as we speak? It's not where it was when they made it. Because the days approaching, we're going to put that wall on off Havels pretty quickly. And I think there's going to be an event next week. Like the forecast, I will expect.
Conditions need the avulsion help.
So the conditions, if I've got this right, don't relate to the avulsion itself. It relates to the structural integrity of the banks themselves. Okay. I understand that, but the compromising of those banks will be a result of the Tartree event.
This condition was put in before the avulsion even started. So it's got nothing really to do with the avulsion.
But when they talked of the 150 instead of the 260 that was recommended, the event was happening then when they went with the bottom figure. That was their decision. Because that was just the last meeting here.
Mr. Chairman, can I comment here? 2 points, just by way of emphasis, really. I think both points are correct. Firstly, the court case that was settled here 2 years ago, in my first few weeks of arriving as the chief executive, the Tartree avulsion was not happening. So there was no avulsion at that time. So that's correct. The second matter, which is in striking the rate after much debate by the joint committee, particularly from the 4 on the north and 4 on the south. They're well aware of the avulsion and where it was sitting at that time and striking the rate. They were well aware. Thank you.
The other point I was going to make, in addition to the cost of complying with their consent, the other thing that wasn't presented to them to take into consideration when they were setting that rate was the likelihood of expenditure on channel management, such as, down the bottom end of the Milton Islands Wall and so on. Okay. Right, so what I've done here, this is entirely up to you. But in order to try and give those guys a bit more breathing space down there, I'm suggesting to you that, or recommending to you that you accept the rate strike proposed by staff at 265. Now I can't tell you off the top of my head what the maintenance component of that was.
Points. So, from my memory of the meeting, and I just was looking, the 4 Western District councillors voted, 3 Western District councillors, and the mayor voted for the $150,000 as opposed to the higher figure of 264. And it's on page 158. It's got the actual resolution that was moved. And Tom, you're right. The discussion around that took place that they thought they've got a brand new wall, that it wouldn't need much maintenance. But you're dead correct. What wasn't brought up at the meeting was the condition that was put on the resource consent by Scenic Circle that requires that, and that was put on by one of the people that asked for the condition. And of course that's not covered in there. So there's not enough money basically to cover that, And I think there's a bit of a change of understanding from Western District Council now of the situation too. Anyway, that's just a point. Whether your option you're actually suggesting here that councillors actually go for the bigger figure that wasn't approved by that council, the other committee, whether another scenario would be to go back to that rating district and say, look, given these other circumstances, would you approve that? And I don't know what other councillors think, rather than us just override what the decision was at that meeting. I know the final decision's with us, but I think in fairness, for me, I think I'd rather go back to them rather than cause an argument, and actually say, well, this is the circumstance that you weren't aware of at the time, and these are the reasons what council would like to, up to councils, say what they think.
I agree with Peter. We shouldn't just override them. That's what they've recommended. They want 150. If we're going to go for another 100K, we need to go and talk to them. We've probably got enough issues with them down there as it is without stirring things up.
Because no one what the thing is, they voted against it was Al Skinner and Ian Hartshorn, which was, it's like they almost didn't understand the recommendation. Because I would have thought they were the ones voting for the less rates, Ian Hartshorn and Al Skinner. But it's coming out here that they voted for a higher rate, which is, it's almost like it's back to front.
Through the chair, I think if my memory serves me correctly, there was an even lower rate strike proposed.
Oh, was it?
Well, was to
Peter?
Yeah, I'm like too to put it up, but the people down there have got to be aware that within the rating district parties, Scenic Circle, they were instrumental in making the necessity to go to the higher one, because the other rating people weren't aware that the requirement for some oversight by an independent engineer came from Scenic Circle, and that cost them money. So it's going to erode the 150 to do the work that they thought they were going to get for 150, because 85 is going to go to a request to engineer from Scenic Circle.
So I'm happy with all of that. I'm happy to present a revised budget back to the joint committee and add those items that they weren't aware of at the time when we considered that and ask them to reconsider.
Those struggles to be done. Another month. Another month. You do it in a month.
How financial are they at the moment?
12 million.
The prudent reserve, given the size of the asset base there, really isn't huge.
So we don't pay the rates, extra rates this year, they're gonna catch up next year, they'll have to, won't they?
Yeah, and that was part of the discussion on the evening too. But no, I think that's a good recommendation from you guys, and quite happy to action.
Could I make a comment here, councillors? Look, I'm very conscious of not being late with our annual plan, you know, with Peter Miller and team. If it's going to prove difficult to call an in-person meeting down at Franz to discuss this matter, I wonder whether we might be able to just circulate an email to all members outlining, you know, what it is, making a recommendation, and then having them come back on email to expedite the matter if we can't quickly get a meeting, you know, that with a date that's suitable for everybody. Thanks.
Yeah, noting that councillor Campbell and myself actually abstained, and I still will do the same, you know, so I think that's an easy way, just go back to them, but I would say that the council here recommend a higher rate, but we want to go back to them for second council. Yeah. Thanks.
Yeah, okay. You want to make a motion of that? The only other thing, if we go back to them again, is to say, if we're going to change the channel of the river to stop the evulsion, we need to have a rough cost, will we not? That's going to be part of their maintenance thing, isn't it? I mean, it's fairly serious decisions to be made here. And that's what we need to let them know, that the money being spent, we're going into a prudent reserve, because there's going to be emergency work done shortly, will have to be done. Because where would we lie, Daryl, with if we don't do anything to the evulsion and there's a catastrophe going on, where's the buck going to stop?
No, so Mr. Chairman, if the evulsion, you know, really cements in and the whole river changes course, there's no liability on this council. That's just the river doing what the river does. Your point though is if we're going to actually engage with the rating district to spend probably what is several hundreds of thousands of dollars to try and realign the whole of the Waiho River into more of its centralised channel to shift it back out of the evulsion, that would have to be a fully fledged rating district meeting in person.
Yep.
So I wonder whether we might separate the two matters. Let's deal with the scenic hotel, you know, court mediation, you know, issue on the email, and what I'm hearing you say is we're probably going to have to get down there anyway for another in-person meeting to discuss that.
Just one final question to your comment, Mr. Chair. The extension to have a wall will not stop the evulsion, it will delay it.
It'll save the ponds, but it won't delay what's going to happen.
No, well, it won't save the ponds eventually either. Eventually.
So again, councillors, if I could comment, we are awaiting a report on this matter, but the preliminary advice is that no matter how strong or deep the tow rock and armouring and all those sorts of things you might want to do on that Havel Walls extension, a flood of a given magnitude, you know, anywhere between sort of a 20 to 100 year event could significantly damage or decimate that, and the evulsion would progress again. So we cannot engineer against every single size of flood. A flood over a certain frequency of magnitude will outflank the war. What we're doing here is buying time to allow the ponds to be moved and other arrangements to be put in place.
Yeah, and could I make a comment on this as Chief Engineer? Totally endorse what Chief Executive has said. But certainly we're doing the best contemporary measures to maximise success, realising we're dealing with nature, including having 4 metres of scour protection. And beyond that, and that we've got a 2D 50 layer thickness so it can settle without falling to bits. So we've done all the best engineering that you can do for this. But in a river of this nature, nothing is certain. Yeah. Is that fair enough, Chief Executive?
Yep. Thank you.
Yeah.
Agreed. Could you just explain, we're going to be voting on setting the rates for these four districts?
Yes.
And you're proposing to go with the staff recommendation on Franz Josef. Which is
back to them.
264.
We're going to go back to the start after that.
Yeah,
we're going to put the others through, aren't we? Everyone happy with that?
Okay, so you're going to leave that one.
Leave that one out.
And you're going to go with the other three.
Go with the other three. That's what we're doing.
Good.
So I was going to go for an amendment on that, approve the rate setting recommendation for staff for the 3 rating districts being Grey, Westport and Hoki. Yep. And for the 4th one, the staff will consult on with that rating district committee for a higher figure and come back to council prior to
the whole committee.
Yep, I'll move that.
You move that? Thank you. Take it in. No? Yeah. All in favour? Aye.
Yeah, we'll jump forward. Yeah.
Which page, Brett?
Now.
Did you say
Only 300.
There's more.
We're not going to do bottle separately or anything like that, are we? We'll have to. You have to nails at some time. You've done your.
So I just wanted to speak to recommendation 6.
Yeah. Okay. Recommendation 6 on the same page, which is still back on page.
6. So if
148. Recommendation 6. Right.
150, isn't it?
150. What page are you?
You have to?
Recommendation 6 is on page 150.
Yes. We have 2 recommendations.
No, sorry, councillors, that's item 6. Recommendation 6 is on page 148. So approve resolution made by joint committees and set out in attachment 5.
Yeah.
And 38. Attachment 5 is on page 203.
What?
What
page are we meant to be on?
I can take you to page 203.
203. Right. Only about 100 pages there.
Ready?
Yep, right.
I'm confused and I'm work lost here. Where are we?
203.
Thank you.
Page 19 of that, I'll send you the one.
Page 1 of 203.
Right.
Attachment 8.2.5. Joint committee resolutions requiring approval by council. Okay, so at each of the joint committee meetings, we took specific papers about specific issues. And some of those papers requested endorsement of various recommendations that therefore need to come back to you as council to approve. Okay, and that was for Hokitika, Greymouth and Westport.
Yep.
I'm going to summarise these.
Yep.
All right. And we'll take one out of the equation already, which is the one for Westport, which you guys have already approved. Makes sense. So speaking to the 3 actions or recommendations that have come out from the Hokitika Joint Committee meeting. First one was to do with approval of the progression, the next stage of Hokitika flood protection scheme stage 3. What I want to do is not get you to approve that one right now. I'll bring a specific paper to you on that one at the June meeting, and that is in response to a request from you, Councillor Cummings. I think you wanted to see the 2 options that we discussed on the day and the cost estimates for each. Okay. Now, we'd hope to bring that to you at this meeting, but given the length of the agenda, we thought it better to push that one out to a later meeting. Okay. Regional Infrastructure Fund Tranche 2. So at that meeting, we proposed to the Joint Committee that we progress putting forward stage 2, which was up at Canary, under the Provincial Growth Fund program, to the Regional Infrastructure Program. There's been a couple of developments since then, and we'd like to reconsider that. So we'd like to bring a separate paper to you guys at the June meeting on that item before you reach a resolution on it. Okay. The third one is to do with the Hokitika seawall extension. There were 2 items here. The first was seeking approval or endorsement of the transfer of expenditure associated with the construction and consenting of the temporary seawall from a West Coast Regional Council WIP account to the Hokitika Rating District loan account. And the expected value of that, or extension of that loan, is expected to be valued at 519,000. Now that one and the following one, which is to approve the topping up of the budget for design and consent of the seawall extension, again from Rating District loan account, in the region of 331,000. Again, there's been some recent developments there, and I would like to ask you to hold that one for the moment until we can come back to you with a separate item on that.
Hold item 2.
Yeah.
And passing item 1.
We pass item 1. It's about topping up, taking the money from the work in progress account for Hokitika Rating District and then putting it on their loan account.
I think you can reach a decision on that one. Yeah.
We need to make a motion for it down. We're just going to make a note of it. That everyone's in favour of action point 1, the Hokitika Seawall Section Project.
This one here.
Transfer of funds from the Regional Council Work Progress account into the Hokitika Rating District account.
So you can say that to do that.
Everyone's, do you want to say something? He's okay.
Okay, we'll add that into the. Yeah.
Yep. Okay. Wanted Greymouth.
Yeah. So Greymouth, there was just there were 2 there. Okay, so the first one was in respect of a paper that we had agreed with representatives of the Grey District Council and staff that we would put forward paper to the Joint Committee about the possibility of further developing a proposal to address some condition issues with the Cobden seawall, around that Gentleman Park area there, and the nature-based solutions proposal for Range Creek, package them into a single project, and then put it forward subject to approval for a special consultative process and approval, endorsement of the joint committee and approval by yourselves to the Regional Infrastructure Fund. So after extensive discussion on the day, it was agreed to take the Cobden seawall component of that out and progress the nature-based solutions proposal for Range Creek further towards an application to the RIF. So that's what I'm asking you to approve here, including a budget of $80,000.
We've approved taking Cobden seawall out.
Great.
And proposed to agree to the nature-based funding for Rat Creek, which is some of it's funded, Range Creek, but some of it's funded through government initiative, isn't it?
No, sorry, Councillor Thomas. The MFE grant has been used to develop a concept and a cost estimate. So the 80,000 that we're asking for here is to progress that concept
To action.
towards the next stage where we can get it into a application to the RIF or whatever comes out of the RIF after the RIF.
And then we'll go into the Greymouth Rating District Board Committee.
So the proposal was that it was to be joint funded
By Greymouth.
by Greymouth and West Coast Regional Council. Okay.
Right.
The general rate for that.
40 of it.
Trying to make sure.
All down.
General rate money.
General rate money. We all.
So for half of it, then it'd be general.
Any comments from anybody?
Thanks for that, Izzy.
Maybe find somebody for that.
Yeah.
Andy.
So we just have to be careful how much you do this sort of stuff, because we weren't going to be asking for general rate money to be actually some, but any other comments? Motion. Pass that then, that would be a motion. That's Greymouth approved number 1. So the initiation of tranche 2 flood protection plan review. And so the 2, 4 and 5, that'll finish the grey wall.
I haven't addressed that yet, have I? Sorry. That's the last one. Just said approval for the other. Beg your pardon?
Yeah.
So that's the proposal to put forward the stages that weren't able to be completed under the PGF shovel ready program forward to the Regional Infrastructure Fund, which we have progressed in the meantime, and it's sitting with Kanoa and ministers for a decision.
We're pretty much all agreeing to that, wouldn't we? How many floodway SIP transfer?
Okay. So this one here is in respect of the proposal to transfer the Grey floodwall assets from the Greymouth District Council to the West Coast Regional Council, and that is acknowledged in the long-term plan. What we did was we presented principles to the joint committee, under which we would use to agree where the various components of those assets should land. Okay, so the structural flood protection assets land with the regional council, pipes, pump stations, and the like would land with or stay with Grey District Council.
So, looking at the meeting there, was it the CEO is going to go away and do that? Was that you, Dale? You and Joanne going to do that? Or was it someone else?
So we have,
Itemise the account, the infrastructure.
so we have that underway at the moment.
Underway, yeah, okay, so we'll just park that then. Alright. Oh, so if we jump back, then we'll obviously all Range Creek proposal. That one's done.
Took you to the last one first. So that would, just to try and confuse you.
Can I just go back to that, the 40,000 covered, that 80,000 was covered by, the Grey District Council and the West Coast Regional Council. But my understanding of it was that I thought that we would fund that jointly because it's our application to the RIF. And that because, then if it's successful, I would have thought that the councils, would have been reimbursed back from the rating district. If the RIF application was successful, that's how I would have thought it would have played. But because the whole thing had to be publicly there was a public consultation. We didn't know whether the public, got an appetite to do it or not. So that's why I thought the councils were both jointly funding it. The cost of that RIF application and that stuff. But if the went out to public consultation and the public agreed to the full with the RIF and that, I would have thought that the Greymouth rating district would have reimbursed the councils for their costs. Be interesting, both yourself and Daryl.
I might have to bring this one to Daryl.
Yeah. Thanks, Tom. Can I just say, look, the same thought had just crossed my mind just before, probably same time as you, Councillor Halleck. I think that would be entirely appropriate. I just want to comment that wasn't what was agreed at the joint committee, but we could actually take that back from staff to the staff at Grey and make sure they're okay with that. And but we could pass that or alter that motion to amend it to that today, and then I'm sure we can land that with Grey District Council as well, and we'll just do that step. I just want to remind councillors this 80,000 is for to be eligible for the RIF. You need to have a concept design, an engineering concept design, which our investigations to date on Raft Creek are not a concept design, they're just investigations. So for that 80,000, we need to buy a engineering concept design, and based on that concept design, we need to get a resource consent to be eligible to bid in for the RIF. And it's at that point, if we're then successful with the RIF, that I think this altered motion would kick in as the reimbursement. Thanks.
Any idea about the whole cost?
So the work that Orlet has done on this to date and cost estimate associated with it is in the region of 2.27 million.
Okay.
And that's inclusive of further design fees, consenting and implementation.
But I want to stress, councillors, that is a very rough order estimate and not based on a concept design at this stage, which is really what you need. Yeah, thanks.
For my education, these pre-works that need to be done, why wouldn't they be picked up by the Greymouth flood scheme anyway?
As a proposal.
Again, through you, Mr. Chairman, the reason why, Peter, is because this is not part of the flood scheme at the moment. So we can't legally rate the flood scheme for a thing that's not theirs at the moment. And that's why I think this avenue has been gone down to a general rate it, and then if it is successful, then we pass it across to the scheme. Thanks.
It was quite a long discussion, and I had to watch the recording twice to confirm that the minutes as Rosello had written were correct.
Any more questions on Range Creek? You okay with it, Peter?
Yeah.
All right. You want down to Westport, are we?
Yeah. again, just taking it back to the start of the commentary here, this item, councillors have already approved at the meeting on the 6th of May. Right.
That's for the one page 7. Thank you. Hey? Yeah.
Voting on. That one,
Voting on there.
the flood wall.
That all?
Do I need to include that? Because I mentioned it was on.
Well, thank you for that.
Still happening, right?
Okay, so I don't need to include that as part of the recommendation. And I think that must miss that they're going to correct that needs to be included.
Yes, that was
Okay.
because we talked about that earlier.
Okay, I'm
And
gonna
we called it back.
do it in that. We need to make it, they need to do the split.
The 50-50 split between Graham Regional Council
And so the regional council will consult with the greatest council on reimbursement of that back. I think the CEOs will talk about that.
Okay.
down there, and no, East Coast Regional. Given the final decision about funding short.
So,
Oh, that's a good.
yeah.
Really bad, man.
So in terms of the whole recommendation, we got new business seconders for 5. When we talked about the rate setting, how we split it, that we agreed with the recommendation for the 3, and then we made the change to go to African focal frames. We haven't moved 1 to 4, and we haven't moved 6. It's something we just talked about.
Happy to carry on moving that then 1 to 1
1 to
4
4,
and
that's
6 with the amendments made that have been noted for that
Yeah,
resolutions made.
okay, we've got some more like to do that, talk about that.
See that, Andy? Yes. Over.
Okay, look, we've been moved.
Peter.
I moved it and Andy seconded it. Okay.
Thank you.
Application report. Page 208. Right.
What did you say? Your card. Yeah, so, yeah. Thank you.
Thanks, Mr. Chair. Apologies from Gavin, who's unable to be here today, so I'm presenting this on his behalf. So I'll start with, there's just sort of 3 items I wanted to speak to briefly, 4 of them, sorry. The first one was Vine Creek. So the work to enhance that catchment's capacity has proceeded pretty well and near completion. I think there's been a few learnings out of this one, and I'd just like to draw your attention to that. There's some discussions in there about how I think in future it's preferable that this work is done more frequently, so small volumes of work more frequently. And while the rate strike for next financial year has been agreed at 55 odd K, to fund future work, because this has made quite a big hole in the prudent reserve. A rate strike of 80,000 to 100,000 per annum is likely to be required from 26-27 beyond, and that the rating district committee supports that approach in principle. So the further discussions required, we're reaching agreement on that, but that's just where it's gotten to it. The next item that I wanted to speak to, or rather others wish to speak to, is the proposed stop pent raise on the code. And I understand, Councillor Cole, you've been doing some background reading and some research, and there's some.
Councillor Ewan, to the chair, Councillor Ewan and I have been doing a bit of research on this and making sure that it will comply with the Joe's when she found that article about or the resource considered approval that they can raise it 0.5 metre or up to 1 metre if it hasn't already been raised and it hasn't. And I've got Peter's got some information there, but I've got a few pictures that we'd like to show how it's come to this conclusion, and that could be quite helpful. Some of these are quite old records. That's a photo from 2017 on the bit of the wall that's this existing stop back that's in question. You can see the river is pretty much only ever gets along there during flood times. So, next one. Now, what's happened now, of course, is that's the same section of river. The river is now flipped over to the true right bank and actually drops in along a rapid and starting to quite badly scour along or eat into the toe of the wall. And the river's come across to that side, I think, and I'll rely on Peter Blackwood to agree or disagree. We'll look at the next one. It's because that's the same bit of wall. To give you an idea where you are, see the hook groin up the top, and it goes about halfway along is where the actual main river is now going, and that's a as-built survey of Stewart's stop bank on the true left bank, and a thing they call the McGrath's retard, which is a rock wall out in the middle of the river that was built in the as-built picture of that is 2013. And really what's happened is the hook groin, I think, has hooked it into the rock retard that's out in the middle, and then it's spat the river across to the, it's got a zigzag effect that's hitting onto the true right bank and threatening the Langridge section of stop back, and that's why they're panicking about it. But the interesting thing was that that stop back that's on the true right bank hasn't really changed since 2006 to present day. It's still the same height, so it's virtually unchanged in 2006 and 2025, the last near up to 20 years. But the stop back on the true left bank of Stewart's had to be built so that it was 0.5 metre lower up. It was supposed to be 0.9 metre, but generally the as-built effect of it is really that approximately 0.5 metre parallel to it, 0.5 metre lower in elevation, so that in an old man flood, the river would spill over onto the true left bank, and before it would actually go another 0.5 metre higher and head off into Langridge and the Taramaki settlement properties all the way through. So that was the idea of the approval of that Stewart's property stop back on the true left bank in 2013. I think was that. Can anyone see what that name is? The very bottom of it. Is it? That's what it was on 13. I think it was. Yeah. So and then finally the last one. That's a that's an aerial photo of pretty much the present day situation where see the hook groin up the top, where that was what it was in the picture on the long section, and you can see that Stewart's stop bank running along the edge of the vegetation, and the McGrath retard is where the hook groin is shot the river across to the true left side, then it's hit that wall, and then it's now starting the zigzag effect, sinusoidal effect, and heading straight into the wall. So yeah,
you can see the zigzag created. Definitely, I'll just comment that those kind of things do create zigzags, and so you get misalignments downstream that are unintended.
Yeah, once it sets up the trigger action of zigzag, zigzag all the way down. And, but the emphasis to me is, it's, I can understand the language is getting a little bit anxious because now it's, getting to the stage of sort of action rather than sort of pontificating a wee bit too much about it. So, but in terms of approvals, Joe's research finding that resource consent allowing the wall to be raised by 0.5 metre is still quite pertinent and okay, because the wall itself is exactly the same within about 50 millimetres of when it was first surveyed in 2006. So it's unchanged in the last 20 years.
No resource consent.
Yeah, there is.
Yeah, there is.
No, required.
Not needed.
No resource consent required.
They're under existing.
And one in 1999 allowed up to 1 metre raise of the wall. And I think that wall, when we measured the average slope of it's about a 1 in 200 gradient. And I think it might be a little bit steeper than the river. So what they could do is they could feather it out above where it's kicking in and just raise it until peaking at about 0.5 metre or so at the end of where it's where the river now starts to turn left and head across the other side of the channel.
So Councillor, through the chair, are you saying there might be a bit of super elevation there?
The river could be doing a bit of super elevation, but I think the stop bank itself is possibly a little bit too steep. It could actually be flattened off instead of being about 1 in 200 gradient. We could make it a 1 in 400 gradient, starting off at say 0 at the top of where the rapids hitting in and peaking down by that where that little road goes across. Can you see like a white
See
line
that?
road
Yeah.
just below where the river kicks in and the bush or the gorse starts? Just by the that white line there is actually running parallel to the river is the actual line of the stop bank. So you could actually feather it, run it out, peaking at about 0.5 metre high, where the river is actually scouring along or cutting, scouring is probably too strong a word, but it's where the river is actually chewing into the bottom of that stop bank, and maybe a bit of rock protection as well would be worth considering. Yeah, but Peter Ewan was done some research on the Stewart side as well and found that the joint was really along what the river is doing.
So the length they're asking for, is that going to be long enough?
Well, I reckon it should be about 700 metres long rather than about 300 or 400 metres long.
700
To
metres
give themselves a bit of elbow room or like insurance for the river decides to hit in a bit higher up and take a bit longer to leave that true right bank as well.
So this is a deliberate, I'm not saying deliberate's bad, but it's a deliberate differential freeboard to protect the right bank. Yeah.
Yeah, to protect the right hand side, because if it bursts through there, once it gets trapped in behind the stop bank actually becomes counterproductive because it stops the water getting back out again. And it would flood a fair percentage of Taramaka settlement. Property all the way down.
I understand that.
Yeah.
So I'll wait till you've finished everything you were saying, Councillor Cole, and then I'll just say a wee bit too when you've finished.
Okay. And Peter?
Look at that too, maybe. Yeah, I didn't know Chris was getting in depth with this till I sent him an email on Sunday night and I was away for the rest of the week. I got, as I say, an old suitcase of consents, files and other things, and I have a very talented son who got into my hard drive and went back through all my deletions, things I never deleted. So I found a few things, from consents to hearing commissioner stuff to assignments, all the commissioner stuff, the whole lot. But anyway, the earliest one I came across was in the original wall for the diversion and the stop banks for the Turamaka flood scheme was came in 1984, the old catchment days. It's like a Lang, the chief executive, Bob Lang. I had a map from 1937 of what the river was like then, and superimposed of it was the proposal for the bank in the early 1980s, and it's on the line from the photographs. It's identical then. It's amazing where the river was then when the need to do it. Other matters that I've come to in 2008, Good Earth Matters. We had no Good Earth Matters from the lift in the Grey Flood Wall where the joints weren't done properly, and we had to have a little case with them and get to fix it. They don't report. None of us can find that report anywhere because I've gone out of business. So hopefully there's still one out there. But anyway, the big flood on Boxing Day 2010, the lift took place at the 500. The only place that the full metre of that consent going way back was done on the hook groin, and that was raised 1 metre to 1 metre in 2011. And during the 2010 event, that was the Boxing Day flood, what's referred to as a Boxing Day. The flow was flowing over the top of the wall where the slow patches where they want it, and it just settled because it was dead water effectively. There was no channeling or scouring. It just riddled over, and that's the issue, to get rid of the water, to get it out. And it's got all the cross sections there where these things were done. But yeah, it just confirmed that what I had in the back of my head, that the lift was never took place of the full metre that was allowed. I've gone to 500, only the metre up was groin, and there was a running spread done of 100 mil or so, 100 mil or so, and just bear with me for a sec. In 2019. Must have been very little, must have been just a depression. But going by the cross sections, it's where this bit is here. So it is a problem area, probably because of the zigzagging. That's maybe undermining maybe the foundation and dropping things a bit. But so between the two of us, unbeknown, we were on the same page, and of course Chris had all the cross sections that I didn't have. I only had one in my files, and that was in 2020. But all this historical thing will go back to the late catchment days. The aerial map goes to 1927.
Keep moving on there. I've just got one question. So the rapid, that's not an old part of the wall or anything. That rapid, the water's going down there, is still part of the original riverbed.
Yeah. Where it's dropping over, you can see the white line about 10 metres out in front of the wall. That's where the river's dropping into a pool and then streaming along the toe of the bank.
Okay, I haven't got too much to say. First of all, I'll talk about the hook groin. The West Coast Cashmere, I believe it was, hook groins was a much debated matter when I worked in Ministry of Works head office in the 1980s. This possibly was one of them too. I don't think any conclusions were reached, but it was a very debated point, and it's interesting what this has done. Now, there seems to be a disagreement on the slope of the stop bank on the landward side after you raise it. And so I'm going to say what the facts are. If you lived in the Bay of Plenty, where there are silts and clay and everything else, you could build a stop bank like this at the 1 and 2 slope because they've got that cohesion. However, for a rounded, this is a rounded gravel. If you're going to have a rounded gravel, you cannot have it that steep. It has to be 1 and 2.5 maximum slope. And that is presented, I haven't got it here, but it's presented in the California Highways. They've got a design document on this for rounded gravels. And I think that's pretty well accepted. So that is the design advice. So that means you need to reinforce the inside as well. And there's one last thing I will say, because you can often hear this thing's endured for a long time, endured big floods. And I do understand that. You always think, engineers always think about what's happened, what hasn't happened. What hasn't happened is a very big flood. When you raise this 0.5 metre, the pressures, particularly on the lower parts of the stop bank from that retaining of the water, they'll be a lot more than what it's ever endured before. So you've got a seepage issue potentially there, which we're not examining. But what we are doing is doing some pretty normal tests on the gravel that we will use, but we're not actually testing the stop bank itself. So to summarize it, my advice as chief engineer is that the slope should be 1 and 2.5 maximum. And I guess I'll leave it at that. Well, and the tests. So that's all I've got to say on this. Sorry.
Mr. Chairman, I wonder if I.
Yeah. No, Darren, no, go Darren.
I wonder if I could have a turn, because then I think that sort of completes all the sharing of what we all know here, and then we can, open it up for questions and comments. So last Thursday, I had an hour-long conversation, a very, very good conversation, very reasonable people. Paul Stevenson, I think, the spokesperson for the scheme, and another gentleman, Murray, who I didn't catch his last name on the call, who was an older gentleman, very, very knowledgeable about the scheme as well. We had a great conversation and a very amicable, productive conversation, and enjoyed it immensely. The only shame was that, hadn't been able to get out there sooner, actually to meet them in person. The conversation concluded this. That the testing of the material we considered to be necessary. We advised them of a price for doing that. It was $1,600 for the full test, picking it up, bulk sampling it, and then getting away to lab and getting the result. They were surprised and probably delighted at how cheap that was. They thought it was going to be a lot more. So there's a lesson in there about our communication, probably not being up to scratch on that. So they said, "Oh, definitely, please get that done." And they did acknowledge that with every fresh that comes down that river, it does move the material around, and they want to be confident that in the area that they think it's all right at the moment, that the material will be suitable. That bulk sample was picked up on Monday. It's in Christchurch now. And by about Thursday, we'll have the results back on that to see if it's a suitable material for the flood bank. The next piece of information is that, just so you'll know, there's 3 things we're talking about here. And I just want to be really clear on that. Firstly, there was the piece of work that was completed in February, some armouring. So that was done, right? The second issue is the flood bank raise. I'll come back to that just in a minute. And then the third issue was the rating scheme instructed the contractor Henry Adams through a very good and standing contract that's in place with them and has been for some time to import some rock and do some maintenance on a section. We didn't know anything about that. They didn't tell us about that. And the only thing that we knew was when we got the invoice for it to pay it of about 25 to 30,000 to my memory. So we've agreed from now on that, look, the scheme has agreed to involve us in any work they're going to commission. But the quick pro quo on that from us and from me is we have to be very responsive to them and can't muck around just like just like on the Wanganui, Andy, so that things don't get held up. On that matter, I have personally signed off that invoice last week. That brings us to the third matter, which is the flood bank raise. I did raise with them because I didn't know that. I said we would want to have a look at it. I was personally worried about the batter slopes and what going up 0.5 metre with the cross sections I saw, what that would mean. They hadn't thought about that matter and did agree that they wanted some advice on that. I understand now we have a written piece of advice from our chief engineer. Thank you, Peter Blackwood. And what we need to do now is take that advice out to them, preferably in person. I've asked the area engineer, Attica, to try and make an appointment next week to go out and see them in person and to discuss this matter. The last thing I want to say is that what they want to do is they want to expend $20,000 as a maximum, and what they wanted to say to the contractor, Henry Adams, is go and do $20,000 worth of work, and when you've expended that, taper it off, and that'll be it until we can raise some more money. And that's because with the work that they'd already done in February, plus the work we didn't know about, means that I think they've only got about $60,000 in their prudent reserve, which means that they don't have a lot of money, and they certainly do not have enough money, even just at a 0.5 raise, to do 350 metres, let alone 700 metres. So all they said is they wanted $20,000 worth of work done. But that was on the basis that they thought that they could just raise the bank by 0.5 and not even do anything about the width and the slopes and extra volume and cartage there. So we do need to go and communicate that. The last thing to say is that we did talk about the consent that was gained in 1999 for a 1 metre raise, and they assured me, and I took it absolutely on trust without any evidence, that they had never exercised that consent. So the consenting matter here is not an issue. We can do that within the consent. The real issue is what can they afford with the money, and particularly given the batter slope issue. Thanks, Mr. Chairman.
I just got so your advice is to put a top dress along the whole 750 metres at 30 grand or whatever it is, or do a section up to half a metre?
No, so Mr. Chairman, they won't be able to afford to do that with the money in their prudent reserve. They only want to spend $20,000.
20,000, but you could spend $20,000 doing a runs up and down with a truck, could you? Get a few inches or? What's the advice?
So the advice is we need to talk to them about the fact that if we increase the height of the flood bank, that poses issues with the batter slopes, and if they're going to do that, we really need to consider taking the width out to accommodate the batter slope. We need to discuss this with the rating scheme, because they may want to rethink this, and they may even want to consider what their rating is for next year, if they think that this is urgent enough and serious enough that they may actually want to rate some more money. I don't know, and that's what the discussion will be about.
Just a question for Peter Blackwood then. So running spread to raise the bank just a couple of inches, would that upset the integrity of your batters on the back of the bank?
Not at a couple of inches.
Yeah,
But we're talking about 20 inches. Yeah.
Yeah, I understand that, but the money.
A couple of inches, so I'm sure it'll be fine for a couple of inches. Could you?
Yeah. Okay.
Yeah.
Depends.
There'd be a de minimis effect you couldn't quantify, but there's an effect that accrues. Yeah.
Yeah. I want one more question for Mr. Cole here. With your cross sections, can you tell the depth of the toe of the rock behind where the water falls over that waterfall?
Yeah, I'd like to know that too. I haven't seen that, Chris. Yeah.
Not at this stage, because that's only probably happened in the last 12 months.
Oh, okay. So that's something that needs to be investigated?
Yeah.
Genetically, you would think? Is that urgent?
We're supposed to be doing cross section of the river now.
But would you put that down as urgent though, to know where the toe is?
Yep, Peter, if we can get a way to do that, we'll do that.
Yeah, we can. It's Attica's scheme, but I'm sure we could do that. Yes.
Through the chair, there was a slope in this bank, isn't there? Where's that slope? A slump, sorry, in that bank.
No, there's no slump at this stage. Not at this stage.
No slump.
No, because they've rocked the toe of it, and that's sort of holding it in place at the moment. It's trying to avert anyway.
So I thought, my understanding that they wanted to get.
But they were saying there's a slump. Obviously,
unless the slumps happened in the last 18 months, we're saying there's no
slump of rock.
I thought it was just a low bit.
Yeah, that's what I understood.
Yeah. Unless that low bit's happened in the last 18 months, since 2006 we've done three runs along the top of the bank.
Yeah.
And they're all within about 50 mils of the same year after year. Yeah. And then there's 3 lots of measurements. So I don't, unless I'll have a caveat on that, unless it's happened in the last 18 months, because that's our latest sort of survey along.
I thought was a paper brought to us and that was one of their main concerns, was getting that slump filled up.
Ionometry though, I think.
Okay.
But Peter Blackwood,
Yeah, I have, yeah, through the chair, could I just make an observation? It's a bit sobering, but obviously when you get a failure of something like this, having endured those like Edgecombe and the Sullivan's breach, it is a very traumatic experience, not only especially for the inhabitants, but also for the designers. You can't believe it. Those two that failed in the Bay of Plenty were due to seepage and underflow. But before I worked at Horizons, they had a stop bank that moved sideways. It actually slid. It was a sliding failure, and you would think, wow. But when they're too narrow, they do slide. And when I was there, they tried to raise the stop bank at Tokomaru. And I wouldn't permit it because it also would have slid. So that when these things happen, they are traumatic. There's no doubt about that. So we're just got to be careful, measured, consider all the facts. I guess that's all I've got to say, really. Yeah.
So just be mindful that these jokers, that the farmers that live there, they deliberately on purpose, because of the risk to the most valuable asset on the true right, they made the wall on the true left 900 millimetres lower than the crest of their bank. So they were mindful of the risk, and it's a sacrificial 900 millimetres, if you follow me. Because
yeah, it follows a Nuesca policy too, which Nuesca instituted in 1988. I don't know when they did this, councillor. Nuesca in 1988, before they went out of existence, came up with that policy. Yeah. Yeah.
so out of this, so we need to get an action point that we need to find out about the toe rock cross section, and is that all right with you, Daryl? Do you want to make an action plan from this?
Thank you, Mr. Chairman. The action point here is, I've already got it underway, is to seek a meeting with that rating scheme next week. And once we get a date that suits the scheme members, I'll let councillors know. Councillor Haddock as chair, we're looking at your diary actively next week as well. And then other councillors will be notified if they want to come. They can are welcome to join us, and we'll go and see the rating scheme.
Well, but yeah. Andy,
generally, if you go up a metre of stop bank, you got to go 2 out at the bottom, unless it's a real wide bank, isn't it? So they should be expecting that anyway.
Yeah. All that concerns me is the toe where that water's dropping over. If it hasn't been recorded before, just carrying under the toe, that's what I think needs to be. Like Peter's saying, if the seepage underneath, if that's gone below the toe rock, that's where the problem lies.
But like a lot of our rock on the Wanganui can be good as gold until you get a direct hit from the river. And if it boils, it'll boil the gravel out like 2 metres out, and then your rock starts falling in. But then you'll get a chance, and the river will go down. It's usually when it's going down. And if you check it, you can see the rocks move, and if you top it up, you're right.
So we'll move on, eh?
I think so.
Yep. So councillors, I am mindful of time. I did have another couple of brief bits of commentary around the asset management system and natural hazards. What I suggest to do is leave those and hand over to Peter Blackwood to speak to his monthly report on progress of the Westport Flood Protection Scheme.
Yeah.
Peter? Yep.
Yeah, thank you. I won't speak for long because actually a lot is happening. A lot has happened, but along the lines before. So we're very, very favourable progress on the design of flood mitigation works for some new areas for the Lower Bulla, which is imminently going to start. That's the Geotech, the North End and Easterns Road. geotech drilling has been done for both of those, North End and Easton's Road, and a bit further up the Arawaiti. That has gone very, very well. Now to my sections. The Buller River Upstream of State Highway 67 Bridge, second bullet point. I just want to say that WSP have updated their Buller Bridge report. I've got that here. It's quite a document, and we definitely will. I think NZTA have said that they want to be very cooperative on this and realise that the freeboard will not quite meet their standards, but they do not want to stand in the way of a public good, important proposal. So we will be communicating with them. Mark Healy of WSP will be doing it first on our behalf, but I have spoken to them too. GHD Consultants, we had a meeting with them last Thursday, Jordan Mandry and myself, and they're going well with the seepage and slope stability modelling. Very, very important, because this is the section of stop bank that has the highest bit, 3.6 metres, and you can see relic channels behind it. And actually in the photos that Councillor Cole put up, you can see relic channels too. So we're just deciding how many sections we're going to model, but that will move at pace. And another important one is the last bullet point. This is very important because this is the whole intangible issue of your stock flow going through the upper Buller, then it goes, some of it goes to Carter's, and we weren't given any money for Carter's because I'm not saying why. So we've commissioned WSP to give us some top level advice on optimizing the consenting strategy. We believe because it's there's an interaction between those two sections, we should consent them application together. So that's meetings for the 28th. That's a very important meeting of all parties involved and ecologists and everyone else. 3 reps from Buller District Council at the senior staff level. It's not a political meeting, though people can come. It's a senior staff meeting to optimize that. Okay, floating lagoon. So as I said in this report, the DSI report, there's some ramifications. I think it's, how many is it? 25 of the 31 samples exceeded background concentrations, which is what you don't want for the heavy metals. So that's not serious on its own, it's the scale. And there's also an issue with the hydrocarbons, which you might expect from the use of that area before for rail and other activities. This is a 168-page report done by Davis Ogilvy. It's very comprehensive, but we've decided that we do want to have it peer reviewed. I've spoken to the peer reviewer today, and I'm just giving Davis Ogilvy a chance for a final internal peer review by their principals, and then that peer review will start on Thursday.
Just
Avery,
sorry. Just a question there, the hydrocarbons and all the rest of it, they're in the ground now.
Yeah.
Are you worried about disturbing it and the hydrocarbons getting out?
Well, there's 2 issues, I guess. The first one is disturbing them and letting it get out. Do you cap it or do you remove it? And the second one is, are they going to pollute the ground or surface water? I guess it's not an area. Well, it is an area where people live, right next door, actually.
Yeah.
So those things need to be. There's a public health issue there, perhaps. That's why we want to get a peer review to check the scale of what's been reported back to us. I think that's probably imperative. Yeah, no, it is a good point. Do you move them, take them out? Do you disturb them? Are you going to make it worse?
Yeah.
Yeah. Avery's resource consent application still can't be assembled. We're just getting the final floor levels of 18 affected houses and to see if it's a material issue or not for a short period of time. Currently, they're 5 to 10 centimetres higher levels in a 1% AEP flood, but most of them are 5 to 10 centimetres lower levels in a 5% AEP flood. It's just the lie of the land. And a 2% AEP flood happens twice as often as a 1%, so they're twice as better off, perhaps. but it needs to be very, very, very sensitively handled. Yeah. And we're very mindful of that. I think it is probably quite a minor effect, but we need to know the floor levels before we can conclude that. And they've all had a letter about this survey, and that's been not sent, it was hand delivered. So we're doing our best there. Lower Bulla, well, imminently the geotech investigations will be commissioned. We're right at it. That is programmed to start on is it the 3rd of June? It's that week anyway. We're going on to Arawaiti and Northern. Where is North End Stockbank. All the holes have been drilled there. Most of the test bits been done there. I think they have to go back and do a few more test bits behind Easton's Road. It's a tricky area because high density not high density, but a lot of houses, and the people have been very, very good. It's a very, very community-minded approach to solving the flooding of Westport. Carter's Beach. Yeah, we've come up with a good alignment. We need to go out and start consulting on it. We're not putting any maps out yet. We want to talk to people first of all before we put any maps in the paper. I wouldn't want someone to see a map in the paper and say that's where I live, because it's not where I live. They're all sort of rural alignments. And we've configured it so that 3 more houses can also be included, which would otherwise have to be protected or maybe handled through the adaptation fund. I know that. Yeah, thanks. Yeah, adaptation fund. And we'll shortly be this is a plus, which is not in your report. We've agreed to start scoping the geotech investigations. And I had a meeting with Christine. I had a meeting with the chair of the Snodgrass Residents Group, and looks like things are going well, and she was going to get another round of feedback to the proposal because there wasn't a lot of said feedback, and maybe we'll start doing the geotech there soon, but we'll do Carter's first. That's me.
Yeah.
Thanks, Peter.
Any questions, Peter, before we move on?
Thank you.
Okay. Righto.
Me.
Right. Oh, we've got to move on.
Yeah, I'll move that.
Second landing. Where's Mark? Second landing. Transponding stormwater. Is that you, Tom?
Me with some support from Stops and Ben Pascoe, who has joined us on the screen. Okay, so you guys are, councillors are aware of this issue that realised itself in November. The town stormwater system and some discharge off State Highway 6 is discharging into the riverbed between the link bank, the new link bank, and the BTA 55k corner bank. There's likely also some contribution from groundwater and seepage from the Waiho River through the stop bank, contributing to that ponding. Ben has led the investigation into how this has come about, so the background, and what some possible solutions are for resolving it. So what Ben will deliver for you is a briefing with some proposed solutions and cost estimates associated with each of those solutions, both the short term and the long term. And we're not looking for a decision from you, we're looking for feedback on you to have it. Okay. So if I can hand over to you, Ben, can you hear us okay?
Yes, I can. Thanks, Tom. Can you guys hear me?
Yeah, good. Thanks, Ben.
Can I just ask a question before I get going? In terms of timeframes, how long do you want me to, or how long have I got your attention for? Because I can skip through things. I've got about.
Past that. Okay, we'll move on. Yeah, 10 minutes. Whatever you need.
All right. Share screen.
Sorry, Ben, just before you start or while you're sorting yourself out, for those of you that haven't met Ben, Ben Pascoe, he's a designer from Tetra Tech Coffee. Tetra Tech Coffee designed with support from others, designed the North Bank stop banks as part of stage 1, and they're also heavily involved in designing the repairs and upgrades to for stage in scope for stage 2.
Over to you, Ben.
Cool, thank you. So just, can you see my screen? I'm not too familiar with Zoom, sorry. Okay, and you're seeing it full screen?
Yeah.
Excellent. Cool, so thanks very much, and thanks for the intro, Tom. Yeah, I wanted to just give a bit of a briefing in terms of what the main features of the system are, some of the challenges that we've got there at Franz. A number of them you'll be quite familiar with, I'm sure. A couple of pointers from the actual event back on 9th of November, and then the solutions that we're looking at. Primarily just to give you a shared understanding of the issues and complexities down there. Okay, so this is what the situation was before the new North Bank stop banks were constructed. Essentially, the town stormwater discharging to a surface water drain running in behind the heliport. Sorry, I should just step back. This view that you're seeing, I've got a few images that look like this. Essentially, greys and reds are higher ground, greens and down to yellows, lower ground. So you're seeing a view of the topography and the LiDAR data. Yes, like I say, stormwater network discharging down here. It's approximately half the town stormwater discharges in behind the heliport, and half the stormwater discharges to the north to some surface water features heading off to the Tartary upstream of the State Highway Bridge. Just looking at this a little bit closer up, we can see the stormwater drains discharging in behind the heliport here, and this area where the blue arrow is essentially an already occurring ponding area in behind the heliport, and one of the early discussions with the heliport operators was looking to try and resolve that as part of the North Bank works, and some of the excavation we did in behind Link Bank was to alleviate that. The NZTA stop bank, when it was built, extended right up into the heliport, recognising that water was starting to drain out towards the state highway. And in terms of some of the data and trends that we're seeing here, this is mean bed level at cross section 16, which is a long-term cross section that's been monitored on the river. This is some of the work done by Matt Jackson and his team. And we can see the bed level rise here, which is in the last sort of 5 years, it's come up around about 3 meters. So that's what's contributing to this increasing ponding here. This is what we've got now. So not beating around the bush, the new link bank constructed between the heliport and Havel's Wall up here at the top has cut off the natural flow path for that water. I would suggest it's fast-tracked the natural process that was occurring there. And the outline there is what we're calling the ponding area, and that was what we saw on the 9th of November. That area filled up and overtopped the stop bank.
This is overtop the 55k corner stop bank.
Correct. Yep. This is just a quick image, hot off the press, to show what could happen here in the future. So NIWA, I'm sure you're aware, NIWA are currently running a morphological model to understand what the bed changes may be over the next 5 years, particularly with the development of the avulsion channel. In this image, blue is aggradation, dark blue being 5 meters increase in bed level, dark red 5 meters decrease in bed level. So you can see quite clearly where the avulsion channel is cutting down. What we see in the area of interest for the stormwater discharge is a typical bed level increase of around 2 to 3 meters. And that's happening, that they've run the model up to 2029. So that's saying that over the next 4 years, we can expect bed level, where that stormwater is trying to drain to increase by broadly 2.5 meters, which is why just maintaining the status quo there or trying to continue discharge to the YO is challenging even in the short term. In terms of sources, I'll race through this, but sources to that area, there is surface water, different surface water flows, the urban stormwater, seepage through the stop bank, and groundwater. Features of that system, so we're talking seepage through the new bank, as well as seepage through the old NZTA banks out onto the landward side. So important to note that somewhat irrespective of how well these banks are constructed, they are still formed of gravels from the riverbed, and there will be an element of seepage through those, as well as underneath the banks in what are essentially uncompacted gravels. I'm going to skip that one because the next slide does a better job of it, I think. In terms of what ground levels look like where that overflow occurred, just to give you a perspective of what the river wants to do, this is a cross section through from the YO all the way down to the Tartary. We've essentially got the YO river level sitting up here at about 135.5 meters in a fresh. Our ponding was slightly higher. We think we know the ponding was at 136, and the Tartary stream's down at 110. So when we say groundwater is an unknown quantity and a challenge on the landward side of the banks, those levels are driving that. So even if we were to pump out all of the stormwater from this ponding area, that may not solve the issue on the landward side. Just a couple of quick slides on that November event, really just pointing out that it was a sizable event, around about a 1 in 25 year event, or slightly higher for 24-hour rainfall. This is a couple of images of the ponding in that area. So right near the end of the event, the pond was full, and you can see the overtopping in the lower photograph there. That's at about its peak, and it probably occurred for around about 3 or 4 hours. So in this event, I would suggest that it wasn't significant, but it was symptomatic of an issue that does need to be resolved, including the potential for that bank to fail more rapidly. So what we've essentially got is splitting this into short-term solutions to reduce that risk of failure and uncontrolled overflow, and then a longer-term solution that will still function when that aggradation that I mentioned earlier has occurred. In terms of short-term options, rerouting the stormwater from the township, we don't consider that that's viable. Essentially, that would require infrastructure sizing to deal with a very short-term storm event. So very large infrastructure running down the state highway. Culvert through the link bank will work for a short period, perhaps a couple of years. That will still function. So that is on the table. A pump. There's a couple of different proprietary options in terms of a large dewatering pump. So that's certainly a viable option with some maintenance requirements, of course. an overland flow path to the Waio is challenging due to the wastewater treatment plant and different land ownership status down that way. Long-term options, rerouting of the stormwater, again from the town. There's a couple of options for that on the next slide. Drainage path to the Waio, which would involve some piping, or drainage path to the Tartary, straight down the state highway. It's going to have a long-term, it's going to work long-term. So I'll just slow down and pause on this slide. So essentially what that looks like, first option that is quite complex is rerouting the stormwater from town. We can take that either north to the Tartary with some pumping and pipe work, or down the state highway, which would require, like I said, very large infrastructure. So I don't think that one's viable. The culvert option would simply be a culvert around about 2 meters below the crest of the link bank to take stormwater from the ponding area before it overtops NZTA bank. And then we've got the 2 overland flow paths with some pipe sections either off to the Waio or to the Tartary. In terms of what those options look like cost-wise, you're talking anywhere from 100,000 for the culvert, probably around about 300,000 for the smaller of the pumps. That's a pump that would need to operate more frequently and earlier in a storm event, as opposed to one that just turns on prior to an overflow event. To the Tartary one, look, this is a bit of an estimate because it will depend on a lot of the negotiations, but we're getting up towards 2 million to get that pipe work down the state highway with inlet and outlet structures and that sort of thing. So what recommended next steps? Implement one of those short-term options, pump or the culvert or both. We're recommending a couple of investigations just to make sure those higher cost long-term solutions are based on the best information possible, and namely that's around understanding groundwater in those areas. If any open channels are cut on the landward side, whether they're going to become seepage paths. Complete detailed design and consenting of those longer term options, and then implementation. And that's me.
So I'll just add to that, in particular the short term stuff, which is obviously what we talked about under the project, which is one of the first slides that Ben showed, which was part of that stormwater ponding issue that was behind the heliport with what was trying to be the resolution, and there was some budgetary allowances in the project in stage 1 for that, but it was never in the realm of the complexity or the long-term solution that needs to be resolved. So I suppose it'd be really good to get you guys feedback, answer any questions of Ben. And obviously we will need to, part of this under the project will be sorting out the short-term solution.
It's the link bank, it's called backup, isn't it?
Yeah, I think what Ben was also showing you though is that there's the existing or the degradation plus the long-term aggregation. It was going to be a problem that was going to cause that ponding anyway.
The build-up is something for the future, though, isn't it? Could go the other way.
Yeah, I think.
But what I'm getting the point is the best economic temporary solution is to put a culvert in the link bank and drain it away so it doesn't overflow.
Correct.
And then wait and see.
Yeah, then you've got a long-term solution. Yes, correct.
You've got about 90K there. That sounds a lot to put a
yeah, that was a conservative estimate. Yeah.
Oh, I reckon you do a lot cheaper than that.
There also that cost just for benefits included if there was any consenting requirements of that, rather than back. But anyway, no, just saying that that's.
It doesn't have to drain right out, does it?
No, no, just take the top coat, run it down the level of it.
Yeah.
Of the
Yeah.
bank.
Yeah, that's right. It would really only take off the top meter, which is fine. The rest disappears by infiltration.
Yeah, so go to Heinz, get one of those plastic pipes, dig it in a metre or two down to the bank and get rid of the problem. It's not 90K.
No, shouldn't be.
No.
Anyone else with any comments?
Wouldn't the water level find its own level from the to that, it's only going to come up to that level of the river, so
It's overtopping going down the road, is the problem. What was there an option in there to take the water down by pipe to down past the sewer ponds? Open drain, because once it gets down there, it must be below the level we want, isn't it?
It's on slide 15, Ben.
There must be an open drain down the right-hand side of the state highway, wouldn't it?
That's what he was looking through, that's the yellow.
Oh, yeah. Does that an open drain or a pipe?
So at the moment, there's no open drain there where the yellow paths are. There's quite a bit of undulation, and there's the risk associated with cutting a drain there is introducing flows along the landward toe of the stop bank. Because we don't fully understand what's happening with groundwater there, that could become quite a significant flow. The existing NZTA drain, which is in blue there along the state highway,
What's the way to go?
requires quite a bit of maintenance.
You can show that photo, Ben, if you want.
Probably because NZTA haven't done the maintenance.
Yeah, yep.
I don't
Quite surprised. There's this in drain there, why not utilise it? You got to put another
so
pipe under the
the rain
road.
that goes along the road reports to the Tartree at present, does it?
Yep.
No, it follows the blue and crosses under the road behind the Senate Hotel Group site.
Well, it's overland.
And eventually it reports to.
And then goes,
Tartree?
follows its way down to the Tartree, yes.
This
Doesn't follow the yellow. The yellow was
No.
proposed as new.
A new drain.
Yeah, essentially it
As
makes
an
it
option.
just through the scenic site and then dissipates into the dock parcel just south of the school. So I guess the risk associated with that is at the moment I'd argue there's not really a flow path there. It's just going out into the land and you can see it ponding all along the wastewater treatment plant tracks. So we just
What sort of volume of water are we actually talking about here? I mean, are we talking 1,000 cubic meters a minute or what? You know, is it just?
Yep. So we're probably looking at around about 500 litres a second for that 2% AEP storm, as best we can estimate, and that's just the stormwater, not the groundwater seepage and other surface flows on the landward side. So it's quite significant.
8-inch pumper, what? Would that be a metre pipe, Ben, would it?
Nearly, yeah. I think about a 700 mil pipe is what we've sized up with. There's quite good gradients available to all the way, well, everywhere. So yeah, about 700 mil.
The 1200 will be done with it.
Do we have to make a decision today, or what's the plan? Just as information only?
Yeah, I think from what we've got from you guys is that the temporary solution of a culvert for less than the money pitched forward is the way to go. We'll come back with that, though, with an actual cost as a variation from the contract.
Right.
So Ben will size that up and we will get that priced and come back.
And
would it need a blanket valve on it for water going the other way?
what's something?
But I think we'll leave the details to Ben to tell us what's going to be designed, and we'll get the variation priced up as part of the project.
Yep, that's good.
Old man the man for that. One played 20 years.
And as far as the long-term strategy is concerned, that's could involve some conversations between themselves, Western District Council and NZTA. Thanks, Ben. Thanks very much.
Yeah, Mr. Chairman, I wonder if I could just come in there. Thanks, Ben. Just a matter of process, take some guidance from councillors here, but we've got a clear indication here of a preferred option of the range of options that Ben has presented to you today. I'm just mindful of the Franz Joseph Joint Committee. We've already discussed today that we want to get down there in person and talk to them about channel works and other things. Is this something you want to run through the joint committee first to get an indication from them before you consider it again? Or because that would usually be the process, councillors?
I think it should be. They'll want to know about it because it's their question, isn't it?
Yes. So can I propose then that we look to make a date for the next joint committee of Franz Joseph, and we've got at least 2 items, if not 3, which would be an update on the works and other things to the full committee from the working group, etc. So I think that's enough for a joint committee meeting. And these things need to be written up into proper papers for the joint committee to consider with recommendations, and then they'll flow on through to this table. Thanks.
Okay, for that, Tom? So, we can do that.
Yep, that sounds good, thank you.
Want to move on? Next one?
Yep.
We don't have to make a motion, you do?
You can say, do we need that as a recommendation?
Recommendation, yeah. That the option.
Oh, hang on.
Press one, not equal zero.
No, you're talking about recommendation, we're going to recommend.
Oh, hang on. Oh, yeah, just putting a recommendation together that, the short-term preferred short-term solution will be the culvert, and that you'll come back with the prices, contract. Would that be your?
And Gerald asked that we take that to the joint committee.
Oh, yeah.
Whether you paper, selection for.
Yeah.
That would have been good. No.
Apparently you did.
Well, then.
Are you moving? Second it, Peter, you.
All right, later.
You'll write that up, don't you? Stage one.
Yeah.
Okay. Like that. What do you get to that?
Well, no, that's more that we've got.
To me, I want to put us through this.
And then, I've got to that level.
Councillors, normally now we would be presenting the project status reports for each of the PGF and RUF funded projects that we've got going on at the moment. Given how things have been going so far from a time frame point of view, and the fact that we've still got electrical ordering needs to have happen this afternoon, I'm wondering how you feel about skipping over the project status reports. Well,
for me, I would stand to be corrected. I'm not that interested in stage one anymore. I mean, I'm still interested, but we can do that. I'd like to hear what's happening in stage two. That's okay.
I can give you a very high level and take questions.
Yeah.
On each of them.
Yep. That's the stage two. Graham has pretty much done and dusted, isn't it? And we're not good about what. So is anybody hear about stage two, Franz Joseph? Is it all right, you, Tom?
Yeah, absolutely. Yep.
Stage one.
So you are with that, Darryl?
Thanks, Mr. Chairman. Yep.
Yep. Okay.
Can I just move then that we received the reports? Well, no, I can't. Got a conflict.
Yeah.
Peter is going to move stage one, stage three, stage four, four, whatever it is.
Hang on, who's going to second it?
And Andy can't. Mark.
Andy can't, Mark. Receive the reports for those three.
For those three, and we'll just listen to Scott and Dick, what's happening in stage two.
Yeah, so
We're in public at the moment.
yes, correct. Yeah. So with particular to Franz Joseph stage two, there's particularly 3 parts to this. part one obviously was the priority one, which was the rubbish dump. Cell banks are both aligned and unlined, so those went out to tender, and we've received those tenders, and there's a separate meeting for that, with the jury meeting around the receipt of those tenders. The second priority was Milton's Bank. Further investigation works have been undertaken there, particularly around not the tow rock, that work was already done, but utilising while the river is going down there, the avulsion was to check the actual depth of rock or the thickness of rock on the actual bank in a couple of different locations. So that work's been undertaken, and we're waiting on the final report to come back to Ben on that, but it is looking like there is a potential to reduce the scope of the top of the rock. Obviously, the rock still has slumped, but it looks like that works will be reduced in that particular area. So, like, I won't comment until we've really gone through the report and what the scope would look like. The third part is what we talked on before, or Darryl touched on it, is the NIWA with the geomorphological modelling is being worked through, but really has a big impact on how big or how long the extension of Havel's Wall is. So we are expecting an updated report, and obviously we've talked about some of the preliminary information there that's affecting that and what Peter talked about before. They're probably 3 key points.
Okay. Any questions for Scott on that?
Just add, as far as our impending major milestone deadline with Palmyra is concerned, which is having work underway by the end of June. It's a contractual obligation on our part. We're on track for that at the moment, and we'll discuss that further at the end.
Anything else? Any other questions for Scott on those? This is the last thing, I'm going to see closing the meeting. And go to public speak.
Would you like someone to move this?
You want to move it?
Yeah, you want me to move it?
Yeah. Seconded. Yeah. General business. General business?
Yep. Ormond's Island, just on the rating district, we asked last time about the money that was set aside for planting and getting the land. There's 2 questions on that. First one is the money being transferred into contingency fund, which is specifically set aside for Ormond's Island replanting, and I get a little bit concerned that it's going to disappear, because rating district meetings are probably 1 or 2 a year, and in between times a lot can happen.
Yeah. You want to talk to that, Darryl? About that?
Yes, thank you, Mr. Chair. I think there's 2 things in there. The first one is in terms of the funding agreement with the Department of Internal Affairs, and our interpretation of what the 1.5 million was to pay for versus their view of that matter. We're just getting some legal advice on that at the moment, and that's out to legal for that. So we'll keep you abreast of that, and report that back through, as well as to the steering group. The second matter is in terms of the legal status of the transfer. And for the last 2 weeks, I've been trying to track that down between Linz and Doc. And unfortunately, due to staff illnesses on the Doc side, I haven't been able to get an update on that, but I have been promised that probably in the next week when the staff members return. So just as a reminder that the land was with Linz. That was a crown-to-crown transfer into the Department of Conservation, into a reserve for flood management purposes, which would be vested in us. And so that's still the plan, but what I don't know is what all the terms and conditions are around all of that. And before that takes place, I want to understand that, but also just in terms of where we're at in terms of that process. So I can confirm that hasn't been enacted yet, but that is still the plan But need to understand, what all that means. So again, that's in a holding pattern, and as soon as I've got that, I'll circulate that. Thanks, Mr. Chairman.
Just a couple more things. I'm just a little concerned that when I read the fine print, it seems like DOC are going to get ownership of the asset, and we're just going to get management of it. And I would have thought that with the description of the way that's been gazetted, that it should have come across to us as an asset, and as an asset, it gives us significant economic benefits in terms of carbon credits, and even management of parts of the island that don't need to be planted. We can actually lease that back to the existing leasee, and it's actually a way of offsetting rating district contribution, or assisting with rating district contribution.
Yeah, I understand that that would be a very clean way of doing it. This was my understanding of why the alternative method that I've just talked to came about, and that's because if the Crown want to dispose of that piece of land, and to us, that would be a financial transaction, and treaty settlement and other issues come into play there. But that would have to be a commercial accounting issue, which would involve money. The vesting, the transfer into DOC, and then the vesting in us, I understood gave us exactly the ability to achieve exactly what you're talking about there, but without the money changing hands, which was preferable from my point of view and the scheme's point of view. But until I see the actual legal documents and all the terms and conditions around that, I'm not going to make no commitments around that until we consider that.
Thank you.
I think going right back to the start, that's what it's always been, isn't it? My understanding of what's been going on, that's always been the case.
Yes.
That there's.
Andy, on page 119, there's in actions, 1/3 paragraph, there's quarry closure communications. Artica Hardiwell will communicate that the Camelback Quarry is nearing the end of its operational life. Is that really the case?
Sorry, is Shanti in the room, or any?
Look,
I'm sorry. Can we take that down as an action and to clear that up? That doesn't sound right. So look, we'll get back to you on that. Yeah.
I think the quarries mixed up. It must be to do with the Kiwi or Blackpool.
Yeah, I don't think they was correct.
No, I won't be
Bob and Andy.
Yeah. Let's see that.
And should I have another go?
Yeah, you can have another go.
We seem to be having some issues with consents on our rating district stop banks. They're saying that we haven't got consent for them all. I thought we would have.
Could you be more specific, please, Councillor Campbell?
Well, even on that repair that they did on the Percy Bank the other day, they were saying that we have to get a resource consent for it there. Whereas I thought our rating district stop banks should be covered with a consent to maintain them and extend them as and when we require, as long as it's not, getting a big extension. I think we need to look.
You will take that as an action point that we look at all the consents for the Wanganui River. Andy, is that what you're saying?
Yeah, because a lot of them banks would have been built under what they call the grandfather rights in the catching board days, wouldn't they? And whether they've ever bothered putting consents over them since then, well, I don't think they have.
Okay, so that's quite a substantial topic there, Mr. Chairman. I think it is right that we'll take that down as an action and bring back a paper on that. Thanks.
Well, okay.
Yeah.
Anything else, Andy?
No, that's finished.
Any other general business? We'll declare the meeting closed, will we?
Just made it clear that we're going to global CNS, so that
A recommendation of the public be excluded from following past proceedings. This meeting namely the agenda item 12, 15, all inclusive. Got a mover?
Yep.
Seconder, Andy?
Am I allowed to second?
Yeah. Welcome back everybody to confidential extraordinary meeting of council, Tuesday, 20th May, following the completion of the operations committee meeting. Welcome, everybody. Apologies. No apologies, declarations of interest.
Three of us here.
I'll actually declare, I'm not sure, but if MBD were a contractor or a family member that's involved, so if they were, I'll declare just in case. I'm happy to leave. Yep. But I hope there's other.
And I think my boys might have put a tender.
Correct. You think? Well,
Roscoe as well, apparently.
I have no interest.
it's not involved.
Conflicting interest.
It's not involved.
Mr. Chairman, can I just make a comment here? This is quite a critical tender, of course. In law, it's up to each councillor to declare their own conflicts of interest, but other councillors can ask and inquire of other councillors around their conflicts, especially if they're not declaring a conflict, which other councillors may be aware of. But at the end of the day, it's up to each councillor to declare a conflict. Thank you to Councillor Haddock and Councillor Campbell for declaring, because that is entirely appropriate given the tenderers that we're going to consider today. And just also really wanting to hear from all other councillors that they don't have a conflict and they need to state that. But some other councillors at the table need to think very carefully about their conflicts here, and other councillors can challenge that before they depart this meeting. Thanks.
Well, I have no conflict. I have no family member involved in the tender process or anything like that.
Thank you, Councillor Ewan.
No, I have no conflict whatsoever.
Thank you, Councillor McIntyre.
No, I've got no conflict of interest. I've got no relation with them.
No, I've got no conflict. Well, I don't think like it.
It's a hard question because where you draw the line, like I know all the contractors, but I've got no bearing on the result or any of the outcome of the tender process. All I can do is make a judgment call on my best decision on who the best deal, really, not take the personality out of it.
Yes, so I just want to remind councillors that if you remember your conflicts, training, that it's not just an actual conflict, it could be a perceived conflict. So if you've got an association with anybody that might be, not directly, but perceived, that might be party to these proceedings, then that should be declared as a potential conflict, even though it might not be an actual conflict. So just stating that. Thanks.
Through the chair, we're allowed to know who the staff members involved with the tender, the opening of the tender?
Yes, you are. But once the members, because we haven't been through all the members at the table's conflicts yet. So once people who have declared a conflict leave, we can then go through all of that information.
Leave.
We're going to go. You want us to come back or not?
Probably not. Do they need to come? Might need to come back, will they?
No.
No. This is only 10 minutes.
Sorry, Mr.
I've got no conflict.
Mr. Chairman, I'd just like to point out to all councillors present that Councillor Birchfield's actually not a member of the Operations Committee, and isn't through the censuring is not a member of this committee that could consider this matter.
Why was I invited to the meeting then? And also, we've got 2 unelected people on the committee.
Yeah, it was the council meeting. It's been considered at a council meeting.
Yeah, but this is a public extraordinary meeting that's public excluded, and the other. So I get councillors to turn their mind to that.
It's at the moment we're being live streamed. It's in the public
Yes,
until
I
we go
understand
public
that.
excluded here.
I understand that. I'm raising these issues because this is a very significant tender, and I need councillors to think very carefully about this and about their conflicts.
Well, I've got any conflicts.
No, I haven't.
I've got no conflict. I may have one if I work for some of the contractors. But, it's the only conflict I think I would have. But no, as Brett said, we all know the contractors. That's not a conflict.
Councillor Birchfield, Councillor Haddock and Councillor Campbell have declared, because they have relatives, sons or daughters that are actually party to the tenderers here. Are you sure that you don't fall into the same category?
Are you talking about Paulette?
No.
Paulette works for the council.
No, I'm not talking about Paulette.
I don't have a daughter who would be conflicted with this tender. She does not work in Roscoe's management, because that's what you're getting to. She works in the workshop in Roscoe's workshop. She is not conflicted. If we're going to go down this track, nobody will be able to sit on the tenders committee. In my honesty and integrity, I would make sure that there is no conflict. What are you saying?
No, I'm asking the question. It's up to you to declare and up to other councillors to question.
There is no conflict of interest with me, with my daughter Lee, working for Roscoe.
So what we're going to do is just note it down, isn't it? I'm not.
Yeah.
It's an honesty thing, isn't it?
Is that what you're going to do?
Note down that people haven't got any conflict of interest, I guess.
Okay. So apart from councillor Haddock and councillor Campbell, write down no further declarations were made.
No further declarations.
I think it's probably worth noting, Diane, councillor Garcia, thank you, may have an association through his business if he has worked with one of the contractors in question. And that would be perceived.
That would that be?
If that's perceived,
relevant.
Leave the meeting.
Not necessarily. There's a judgment call. Sorry, if I could just advise, there's a judgment call for you to make here, Councillor Cole, whether you think that's reaches a bar that you need to remove yourself, and that's your decision.
What you're going to think is, the way I look at it is, I've got no way of interfering or persuading contractors or whatever, what their prices are, whatever. Like, I'm guilty of living on the West Coast and working in the earthwork industry. And I treat everybody the same. And if you took everybody out that knew everybody else, Roscoe, and you just got to draw the line somewhere. It's quite different for these guys. They're close family, though.
So the difference with me is that I've worked for Roscoe, I've worked for Avery's, I've worked for lots of contractors. So does that cross the threshold? I don't know.
No. So have I, Chris. It's whether you can influence them or whether you're going to tittle cattle back to them.
No influence.
The prices are in there anyway.
Yeah, if you had put in a bid though for part of it to do the survey for them, so then that would be where I'm. Yeah.
But just to reinforce that, a perceived conflict of interest doesn't necessarily mean you're ruled out. It just means that you've gone to the extent of declaring it.
Yeah.
That's right.
And that we may need to put steps in place to manage it. Okay.
All right. Can we move on then, will we? Public excluded.
So you need to,
So now we just need to declare that we're going into.
Going to declare we're going to public
Yeah.
excluded.
so do you want to move that?
Yeah, we'll move.
We
public
just need to move that we accept whether we accept the declarations of interest.
Declarations of interest.
We should,
And move.
Yep.
Positive, that's the procedure we do.
hang on, we're just gonna move to accept the, oh, sorry, did you have something to say?
No, I was.
Oh, yeah. Can we just move that we accept the declarations of interest? Got, from McIntyre?
Mr. Ewan.
Oh, yes.
Okay, thank you. Yes, and then we're just gonna go into public excluded.
Then we'll go to public excluded. Agenda 5.1, all inclusive. Prince Joseph Stage 2 tenders.